All right, we are unmuted. There we go. How's it going, everybody? Welcome to the stream. One day late Fireside with the man, Mr. Eddy himself, and to all you bandits out there. We'll start off with a nice, cool cheers to the week and to the month in the past. Hope y'all traded well and are toxic free, continuing to do this amazing job. So here's to you, bandits.
Cheers.
Cheers. So with that, guys, I'm Gator. This is the amazing Eddy. Been on here with me a couple of times. We're going to talk about the month, going to review it, just generally talk some psychology, some trading stuff. If you have questions or anything else, throw them up in the chat for us. If not, we will just talk and have a conversation. So we're just going to review and see how we feel about everything. So let's kick this intro. All right, guys. So Eddy, I haven't been able to talk to you much. I mean, I've texted you some, but how was your backpacking trip around Europe?
Well, it certainly wasn't backpacking, but it was a fantastic trip. I used to live there, so
Hmm.
to go back to I hadn't been back since before the pandemic, 2018. So got to see friends, got to see family. I took my wife. It was her first time except for Greece, but we did Paris, then we did Greece for a wedding. Then
Nice.
we did Italy, then we went to Amsterdam, then Paris. So we got COVID really early on, which was fantastic. Got to get to know the French medical system really well, which is always fun. But no, it was a really good time. We avoided a lot of the chaos, which was a blessing. But I felt so burnt out before that, and my
Hmm.
trading has definitely improved, just being less mentally fatigued.
Do you feel like, I don't know, for me, moving was that. Like before moving, I felt like mentally pressed because it was just like you have like 50 things going on, and then it went from that to like, okay, I'm moving in, stuff's going, and everything just kind of smoothed out in a certain sense after the fact. I imagine kind of going on vacation and being away from it might have helped you a little bit in that way, like just kind of, okay, I'm back, and like allows you to re-zero yourself mentally.
Well, I think it's just changing your routine, right? It's refreshing yourself and not looking at the market. And over there, the market opens up at 3:30, or 3:30. So you're in a different mental state the entire time. But you know, at the end, like right before I left, I was just trading and it was just like automatic, and I wasn't even making that much money all of a sudden. I was just mentally just like, oh, I can't wait to get out of here. But um, you know, if this is a job, we all need a vacation, we all need time off. This is very repetitive what we do.
Hmm.
Like if we're taking Mark ones all day, great, but it is repetitive. So changing things up, I think, is extremely healthy.
Are you Did you actually trade over there? Like you brought your setup or a computer or no?
Heck no. Heck no.
You were gonna
Wait,
trade over there?
no way. There's no, wait a minute. I'm not going to,
VPN to the US so you can get on your.
I thought about it. I thought about it. My wife was like, if you dare, I will fucking murder you. And I'm like, all right, I'm not going to. But in all reality, I'm not going to go from 3:30 p.m. to 10, which is a majority of the day, to work. Right? I want to enjoy the time. So that's what I did. But I was looking on my phone a little bit. I was like, oh, son of a gun, these are good trades.
Hmm.
And I listened to the NewsBeat live room a little bit, and I was like, oh, I know they're crushing it. What a week to go. But no, I don't believe in trading when on vacation. I think you really have to separate, work from play. I really do.
Yeah, I do too. I think it's important to do. I was away at the beginning of this month, I think for like a week and maybe a little bit more, like a week and a day or something like that, 6 or 7 days of trading days that I missed for travel and a wedding and mission trip. So it was good in a way. Like I missed stuff, and I don't know how the market was when I missed it, but it was good just to not trade for a little bit and just to not worry about it. Like I really wasn't concerned, no matter what happened, no matter what was going on. I was just like, hey, I feel pretty good with everything and where everything's at. So I just was there. I came back, and I actually came back and hit it pretty good. Like I hit the ground running. I felt like I was pretty relaxed coming back and kind of just ready to trade. I wasn't too aggressive. And I wasn't like, oh man, which is different than before. I don't know. Maybe I'm getting better at it. I don't know if you experienced the same thing, but I was like coming back And the temptation is like, okay, I missed out on all this money. I'm going to smack the like I'm going to smack some stuff and have my biggest days. I didn't come back with that mindset at all. I kind of just came back with, all right, going to do a couple trades and we're going to see what happens and try to be really precise with our trades, and started doing it and put together a really strong, second half of the month, 2 weeks, basically 2 weeks of trading this month just for me. And it turned out to be really good. I don't know if you kind of experienced the same, or if you had that, like, the fight with trying to make what you missed back.
Well, no, I actually didn't, because our style of trading is very similar, right? The first hour, first 2 hours, you really put in the work, and then maybe the rest of the day you'll have opportunities. But I expect to be done within the first 90 minutes of trading. So for me, if I'm not doing overnights, if I'm not holding positions, I don't care if I miss a week. I don't care if I miss 2 weeks, because I know the market's not going away, right? Yeah, there's the opportunity that you could have made money, but at the same time, the opportunity to live and not be glued to your computer, I think, is why we do this.
Yep.
And it's a lifestyle. It really is. It really, really is.
It is. I love it. Like, I really love. Forgot to post this over in Discord.
Yeah,
I really do love what I do. Like, when I say at first it was just a way to make money, but it was like partially a way to make money, partially like just fun and extra stuff, and something that was like surreal, and then not really gaming, but like it turned now into like a craft for me, and it's more than just something. I mean, it's my full-time job now, but it's something that I truly love doing, and love the more I understand. And the more that, like, you can predict moves, and I'm sure we'll talk about some, but like measured moves and all these different things, the more you can see them happening and predict them happening, it's like, dang, you almost see yourself getting better as you trade. And there's just something about it that's just so much fun, and just really makes it more than just like a fun kind of side gig, but you really get into what trading is, and growing as a tradesman, to use the word, or a skilled person.
Well, I think what's so interesting about the market is that the way I see it is that you're actually studying, you're studying price action, but what you're really studying is the movement of money across different names, different asset classes, different currencies, different parts of the world. I mean, if you have a currency that's like the dollar that's very strong, it's because people are buying the dollar to maybe buy equities, to maybe buy our assets, whatever it is. But if you have this macro mentality, this international mentality of where money is moving around the world, it's one of the most fascinating things ever, right? Like, just think of it like this. Like, yeah, you could just look at, oh, it's Tesla and they're a car company and they have candles, but you have a lot going on in the background. And the more you start learning about it, the less you realize you know. And I think Geronimo really taught us that lesson. Like, there's a lot going on, guys. It's not just Tesla. And I think it's been just such a this year has been fantastic, right? I mean, it has been such a maturing experience for a lot of the traders that you and I know. And I think it's been truly wonderful. We've all learned so much, and we're all growing. And what's important is that, like I'm sure we'll talk about later, when Tesla splits, it could be a completely different name, like Amazon has become. And I think we're in much better shape going into something like that, because we know how to trade better than we did last year.
We've really, I think, in many ways grown and adapted to the market. And the people that don't adapt, I mean, there's different reasons that it takes different people longer to adapt. But the people that have adapted are the people that are continuing to do this, that have been able to stay strong and understand the changes. And like, I don't think I've ever seen an ATR this low in Tesla, like an hour into the day. Like,
yeah,
it would usually take noon to get the ATR, even if it wasn't trading well. The ATR would be, for you guys who don't know, average time and range. It would be like, it would be what, like $2.50, $3 until like noon or 11:30, and then it would start dropping off into the $2 range, and even then it never broke down below $1. And every day this week in the afternoon, it was like, oh yeah, ATR in Tesla is like 80 cents on the 10-minute, or $1.10 on the 14-minute, and I'm just like, man, like I don't remember this before.
Yeah. Yeah. Well, that's the thing is that when your average true range does drop, I know you do a different period than I do, so our numbers are a bit off. But
Yeah,
for
yeah.
me, if under $2, it's not worth scalping. Like you can definitely make money off of it, but you're either hoping for really good PI or a bigger move. There's nothing wrong with that. But as long as you know your time of day, the name you're trading, that there's PI and what the market's doing, you're in good shape. But it is, I learned the hard way how easy it is to try to hyper scalp a name like Tesla when it's moving less than $1 per minute, right? It's kind of wild. And like you said, there were some days where, remember, I think it was beginning of the year. It was when Elon was selling. I guess it's kind of cheating, but like HR was like $8 a minute, $9 a minute within the first 10 minutes. And all of a sudden
Yep.
you're like, I should be in bed now. I cannot keep trading like this. So this is nuts, right?
Yep.
But those days will come back. I'm not worried about that at all. Tesla, for example, I mean, it's not the only name on the market, but the market looks like it's ready to make a big move, in my opinion. It already has. I'm not saying it's necessarily up, but we're at a key inflection point on a lot of names, and that's actually that's really good. That's really really good. I mean, I remember you were saying on another show that you're extremely bearish, and I'd love to know why at some point. But
Yeah.
I don't care. Who cares? Who cares if you're bullish and bearish? Is it going to move? I want to. That's what
Yeah.
I want to move. You
I
know?
just think I think the market does stuff. I mean, I'm not a long-term technical analyst, but we're at the beginning, like just my opinion on all this. And
Yeah.
what up, Ralph? And hey, guys, yeah, I see some people starting to come in now. So what up? Hope you guys are doing good. We already did a cheers, but cheers again to you homies coming in a little bit later. But overall, like all the conditions and stuff that kind of made the market go down and the fear, none of that stuff has been persuaded. And I don't know that we're more than a really bad earnings season or another little war or some other stuff, China shooting down something, anything that could happen to just absolutely tank this market again, because none of the real fundamentals have changed. The Democrats, the people in power right now, and the Republicans are just as stupid, are dumping all the money into the market, doing all these still stuff. So we're still printing money. We're still causing inflation. None of those factors, to me, really are going to stop. That doesn't necessarily have anything to do with the market, but you look at all that, I don't see, just me thinking about it, I see us going up and eventually hitting somewhere, and then just doing one of these, like a little bit of a pop like this, looking at the SPY, and then just bye-bye. Just punking everybody. Everyone's like, okay, hey, maybe we're going up. I'm going to start buying back in everyone who was scared here and scared here and scared here. Get another leg up or something, and then see some retail traders and other people start getting confidence in the market. And it seems to like to do stuff like that, and then it'll just shank and hurt you and just rip against all the people that start buying in there. And I mean it's not a technical analysis in the way of like I'm like these patterns and this stuff is setting up. Is more of just something I could see happening, but nothing I'm putting money on.
Yeah. Not our
And
style.
as we come up into the 200 and stuff like that on a lot of these names, if we even get to that point, then we'll see. We'll kind of see how things set up. I just don't think I don't think we've seen the bottom. And if we have, that's cool. I'm more than happy to be wrong. But there's no technical analyst other than just everything that's happening. I feel that it's not done. It's just kind of getting started. So that's a non-expert answer. I don't know what you think about it. If you
I
think,
mean, the charts are telling you that maybe a temporary bottom is in. I'll give you that. And a lot of people, on the talking heads on CNBC in our rooms, the traders we talk with, a lot of people still think we're going to see new lows this year. But we have to say to ourselves one thing is that, okay, we know interest rates are going up. We know inflation is high and probably is peaked. We know that Europe is screwed when it comes to energy. We know that the Russia-Ukraine war is continuing. So what's the next, okay, it's bad, right? Things are not good. How can they get worse? And I continue to think that China's situation is really, really bad, and that can really, really tank the market. So, and this is something that Geronimo and I have been talking about a lot on and offline, how this housing crisis in China, and there are protests in the streets, and they're sending tanks in the streets to quell people, and this ludicrous zero COVID policy that they've enacted since basically day one at some point it's going to bite them in the behind, and it's going to bite us as well, because we buy so much stuff from them,
Mm-hmm.
right? We are so dependent on China. I don't care what your views are. I
Yep.
don't. But the truth of the matter is that when former President Trump put the tariffs on China, it created a very interesting effect that people said, okay, I need to leave China. I need to move to Vietnam, my factories to Vietnam,
Mm-hmm.
Indonesia, Malaysia, a lot of Mexico. And we're starting to see now that that basically brought forward a process that might actually be very, very important in the future. Because if China goes into, anarchy, to chaos with this housing crisis they have, and by the way, people are paying for homes, mortgages for homes that aren't completed yet. It's wild. And people are extremely, extremely pissed off. And that's how social unrest happens. We could definitely be in a time where one of the world's big superpowers goes through a massive, massive crisis. And I don't think people are ready for that. I don't think people really know about that. But don't forget that we import goods for the cheap, or on the cheap, for very cheap, from
Mm-hmm.
China. So, you know, that time can change. Like, look at Apple. They're moving out of China slowly but surely. They're
Yep.
trying to go into India. They're trying to go other parts of the world. So, when it comes to black swans, I don't think we've seen the worst yet. I'm not saying that happens this year. I'm not saying that happens next year. But do you really think now, than the next, by 2030, that China is going to be nearly the superpower it was today? Maybe, but it's definitely not looking good for them. Their long-term prospects have definitely come down. And as long as they're like this with COVID, I have more conviction in that call than ever.
Yep. I'm right there. Give me 1 second. Keep going. One of my
Yeah,
kids are
yeah, yeah.
screaming, so give me 1 second. Let me go get him down.
So Jacob Lendrum saying, we'll be in a bad spot for several years if China moves on Taiwan. We lose whether we intervene or not. China has to erase their debt by rejecting US banking. So I don't know about that last sentence, but regarding the China and the Taiwan thing, I think that's really interesting, because so everybody's talking about this. This is the big talk, right? If Taiwan goes, if they're taken over by the Chinese, then China will, they will be they will own the leading companies that produce semiconductors, right? A lot of goods, like we actually do a lot of business with Taiwan. So it is in our direct interest to make sure that Taiwan is independent, providing us the chips we need for our way of life. Let's be real. This iPhone, how many chips come from Taiwan, right? The computers we have in front of us and everything. So, but I read actually I listened to a very interesting podcast that was saying on Taiwan that if you compare Russia, Ukraine, and China, Taiwan, is that Ukraine didn't really have much time to prepare, but Taiwan's been preparing for this for decades, decades. And now China has seen how the world has reacted to the Ukraine-Russia incident. It makes their lives a lot more difficult. So I guess what I'm trying to say is that if whatever China does right now, they're in the hot seat, right? With Taiwan, with their housing crisis, with their own people, that's the black swan, I think, that could really, really create insane volatility in this market, which is not necessarily a good thing, right? But you have to pay attention to the macro. You have to pay attention to what's going on in the world, because it does move markets.
You said something and then you just said it there. So segue into it. What up, Jacob? Gary, Paul, Marco, Dan, what up, everybody? Naveen, Blademan, sup, guys? Thanks for coming out. Um, I I very minimally, like, I really don't pay that much attention to what's happening on the world stage. Um, it's not something day to day that I put almost any focus into, and some people will be like, "Oh, you should, you shouldn't." Not the point. The point is I don't. I look at the two minute and the 200, and I like do all my trading, and I pay somewhat attention. Like I know kind of what's going on somewhat, but I don't put a lot of effort into a lot of the bigger macro stuff. How much do you, when you're looking at stuff, because like we trade similarly in the, your short mark ones or your fib lines and different stuff like that, how much do you allow the macro stuff to affect what you're doing on the intraday? Or do you kind of like, hey, I think this, now I throw it all out, the only thing that matters is the micro, like today? Like I could think we're going down before the end of the year, but right now Tesla's like
Yeah.
bullish today.
Well, I don't really care for the macro when it comes to, a 2 to 5 minute portal on Tesla, right? That's not really what
Mm-hmm.
my focus is. But there are times when someone is saying something that affects the macro, right? Like whatever it could be, something Ukraine earlier in the year was moving the market. So it was important to be aware of this. But my fascination, like at the core, is commodities. I think commodities are one of the most interesting things in the market. That's why I love oil and natural gas. Now, to be clear, I don't trade those instruments. I don't trade many of those companies. I don't trade them on the intraday ever. But whenever something happens, such as Ukraine or Russia, that affects the price of wheat or the price of energy, I like to see that happen in real time. I think it's fascinating. There were times earlier this year when, what was it, end of February, when Ukraine got invaded, we saw the price of oil. And I remember Geronimo, like he was at his lunch with his wife, and all of a sudden Ukraine's getting invaded, and he's just texting me like, "What's natural gas doing? What's oil doing?" And I get that passion because that is money moving around the world. That's people placing bets on what's going to happen, right? Demand and supply are going to change for these physical raw products. So to me, it's absolutely fascinating. So I'm not there sitting saying, "Oh, well, the price of wheat could go up, and that could affect Tesla." No, but it's super interesting to see these charts move based on real world actions. That to me is just fascinating.
It's funny to see like the economics of supply and demand kind of kind of happening like right in front of your face.
Yeah, no, and it's 100% in, because as you know, that is my background, right? International economics, and I've always been very interested by that. But I've always been very interested in trade between countries. So to see how that's affected by real world events is super cool. It's just super cool, and it's more of a passion and a hobby than something I make money out of, right? Because it doesn't matter if Russia's invading someone or not. Tesla's going through that 2 to 5 minute portal, whether they like it or not, right? And I'm going to nail it no matter what. But trading with someone like Geronimo has really forced me to up my game in that world, and I love it because you just learn so much.
And the more you know, the more you realize you don't know, and then the more you just kind of look at stuff and like, huh, all right, and interesting.
Exactly.
That's what it's like. It's like, I don't know, like nothing I say on here is I'm not an expert. I'm just giving you my opinion, and that's all it is. I in no way, you should never do anything that I say. Marco asked an interesting question. I think it's a good hop over into this. So you have made almost meme worthy levelness sometimes of like, I'm out. It's like I was out like 3 seconds after I got in, or like, yeah, I was out like 10 minutes ago, or whatever it is. Like you're very quick on your trades, and it's not a bad thing at all. It's what the strategy that you're trying to execute is a shorter strategy. You're not trying, and I'll ask a second question in a little bit, but you're not necessarily trying to hold longer or to have a large target like Kelly, myself, sometimes Geronimo has. But, Marco asked, you held Apple for a little bit. I don't know if you want to talk specifically about that trade, or are you trying to undergo a little bit of like gradual growth to intraday swing trading to fib levels or targets or stuff like that?
So there's a couple things there. So first off, just regarding that particular trade, I saw, I think it was Apple was coming into a pivot point. It was an earnings name. It looked really strong. The Qs were strong. So I bought the 1 minute breakout. I held it for 4 minutes, ladies and gentlemen. And it was actually my best name of the day, which is not something I say often about Apple. I think the reason I did that trade, Marco, so there's a couple things, is that as a trader, you need to realize, and the sooner you realize, the better off you're going to be, is that the market's going to change, and you need to try to get in front of that. Now, particularly, and this is something, Gator, that you discussed on your show, I think it was with Mitchell, that Tesla's going to split. So it could be a completely different name in early September. It could be completely different in the same way that Amazon has changed. So I'm preparing myself mentally and through Fidelity and with all their tools that they offer to be able to hold intraday swings on Common. Now, the other reason I'm doing this is because it's kind of blowing my mind how much more money you can make with less stress, right? If Tesla drops against you real quick and you don't mark it out fast enough, it's the difference between a small loss and a big loss. But what I've noticed is on a lot of these intraday trades is that I'm not using my full account's potential. I keep every day my account starts at the same level, and I have 4 times marginal fidelity. I'm not using that full amount at all, and I could be. You buy 1,000 shares of Apple, that's pretty good. You put a tight stop, you lose 20 cents, 30 cents. But if it keeps running 2-3 points, you can very much make your day like that. So I've really come to appreciate the art of taking longer intraday swings. And I actually, this is something I was telling Gator earlier, that a quarter of my month was not Tesla, right? It was not intraday swings, which is a big deal for me, a trader like myself. Um, so what I've been doing is I've been using Fidelity and I've been using Trade Armor. Trade Armor is a very fancy way of just calling it, they're conditional orders or bracket orders, right? You set your stop, you set your sell limit where you want to sell, and you say where you want to enter, and then you don't even need to do anything. You can just watch the trade go. So when I was in Apple, before the trade happened, I said, okay, the next 1 minute breakout, I'm going to set my stop at the low of the 1 minute candle. If I lose, $200, and if I hold it for the $2, I'll make $2 a share, right? Which is pretty good. So my risk reward was like 3-1 or 4-1 in that moment. And it took the trade. Green bar, green bar, green bar, sold. I sold near the top of the day, I think, which was very nice.
Was it R3 that you bought at? I don't remember the trade. Was it Apple? I could assume it's
exactly. Oh yeah, so it was at 10:10.
10:10. So you got okay. So this candle.
I bought the 1 minute high, right? I bought at 162.40, I think.
No, it's not 10:10. It would be 10:12 or 10:13.
I'd have to check now. Oh, I'm on the 5 minute. That's why I can see.
Yeah.
Right now, that's why.
Yeah, but so, I mean, I can see why you would take this trade. I would take this trade. I mean, look at this. Like you basically bopped above R3, and this is your third test, and it didn't go lower than this. Like at this point here, you're like, okay, you have a really easy like stop here, like 20 cents lower, and a day high break almost guaranteed if you break.
Yeah, actually,
62.60.
I have to be honest. It was 9:37.
9:37.
9:37. So I bought as it hit R2. You broke that 1 minute red bar, bought through there. My stop was
that's even better.
Yeah, 159.49. So I get stopped out often, but I also take very small losses. So I wanted to play for a move to day highs, and I caught 2 points on that move. And I know people are saying, "Oh, 2 points, that's not huge." Listen, you take 500 shares, that's not bad. And I didn't do anything. I just clicked it. The trade was done. So that's the beauty of conditional orders that I've really come to appreciate again. And I could have just walked away there and just been like, all right, that's my day. It was a great trade, and not all trades are that great, but that one worked. Simple as that.
It's nice when a plan comes together.
Yeah, and listen, it's so much less stress, right? Because it's a liquid name. If you get stopped out, just about how much you're going to lose. I try to lose no more than $200 to $300 per stop out on a common name like this, and I'm trying to make 2 to 3 times my risk. It's not rocket science, and a lot of traders do it. It's a lot easier than hyperscalping Tesla, I'll tell you that.
Yeah, it definitely can be. Have you found it changes, like what's the cycle? You have found it's easier to do this in a choppy market than the psychology aspect of it?
Yeah. Well, options, they're a decaying asset.
Yeah.
So fundamentally, if you hold it for too long at the wrong time, it could crush you. Like remember, I don't know if you're around on FOMC this week, but did you see what happened about 10 seconds? Was FOMC this week?
Yeah,
yes, it was.
Yeah. I didn't. I traded, but I usually just trade the Qs, and I usually wait. I found like I've gotten not great at it, but decent with I just let everything happen, and then it's gonna run in either direction after the fact. So I take small size and I let the trade go. Usually, I did something like that.
What happened was about 10 seconds before the announcement. So at what was the announcement? So at 1:59 and 50 seconds, the options on Tesla, the spread about $8. $8. Like that's wild. Do you realize how many people can blow up with just not knowing at that very moment something's happening? That liquidity suck, which takes prices away like that. So with common, you don't really have that issue as much, right? Or ever, frankly. So it's a lot easier. You can set a defined stop. You know how much you're going to lose. It's, to me, the best way to build wealth long term is to try to learn this. So that's what I've been doing. That's how I've been growing this month. I had like I said, a quarter of my month was not Tesla. It was intraday swings. So the Meta, Nvidia, AMD, Apple has been really good. Amazon, Google, for those who like those types of names. On Tesla, it's a little bit more enjoyable to do options, but it doesn't matter. You can still do it, and it's less stress. And for someone who hates toxicity and who fights it as hard as possible, it's a great, just bracket orders with Fidelity. You
Yep.
say, you plan your trade when you're in, when you're out, when you're done. Period.
And as you build up your account, if you have size, I've considered putting a bunch of cash in an account to do that and to take size, appropriate to how I feel comfortable, and do both, and have a laptop or something and a different Fidelity account with cash and bracket orders and names that I like. I don't want to babysit the options because you never know what's going to happen. But
Exactly.
there's plenty of, other things, but there's plenty of trades like this where it's like, okay, so I'm waiting on a gap up name to pull into like either the 38. These are inverted, so either the 38 or the 61% retracement, 50% retracement. And as long as you get a green take shred, and there it's like it hit this one, it instantly bounced. You take a breakout, there's your 127, and there's your 161, and both hit. So
Yeah.
there's trades like that, and I do a pre-market show, if you guys who know it, who are in the Discord and stuff, with Andrew, CT, other people hop in. Anybody can share stuff, but I kind of start off the day with what I'm looking at. And there have been days where I'm like, okay, well, if the market runs, this is going to happen. I like this going here, and looking at the chart, this is the target. It needs to do this. And I've been surprised intraday, and I'm wrong a lot, but also the times when I'm like, I really like this and I see this doing this, how many times I've hit those like stuff and it's gone to those levels. I was like, oh man. And it's not that I'm always right, but it's like that potential's there. So how can you turn this into, something that's not just scalping? I can't do it taking 100, 200 contracts of meta and being like, I'm letting these puppies run. It's like, that's not going to
Right.
work mentally for me right now. It's like, I don't have that kind of money yet. um,
But listen, if you have I'm very transparent with my numbers. I
mhm.
do a 50,000 account,
Yeah.
so I don't need to do that for what I do, because you just need 25,000 for PDT, a little bit of a buffer, and you can trade Tesla all day long.
Oh yeah.
So I don't have a huge size, but if you have a $50,000 account, that's $200,000 buying power. You could buy 1,000 shares of Apple,
Hmm.
and if you catch $1, that's $1,000,
Yep.
right? So if the ATR on Apple is about 20 cents a minute, for example, let's say, in 5 minutes you can make your day. Like, that mentality has been truly fantastic for me this month. And here's one thing I've learned as well, is that when you set that trade and it's planned out, your exit and your stop are set, and you're just watching the level two, I've learned patience. Like,
Yep.
my average trade this month in July was 18 seconds, but when you start holding trades for longer, you're sitting there, you're sweating bullets, but you're like, I'm letting the trade work. This is not going to hit my target, immediately. I need to give it a couple minutes sometimes. And that mentality has definitely helped me grow as a trader. Definitely, definitely, definitely.
Yeah, it's a good way to look at it, and a good way to kind of, especially doing it with cash, I think it's easier maybe to train yourself to hold. And that's kind of like Praveen, you asked, what steps can help me transition from scalping to a 2 minute hold target. So there are two there are two things. One is I used for a while, I was using stuff that Geronimo and Kelly would talk about, like these pivots, and I didn't trust them, or these fib lines and stuff. I didn't necessarily um, have the confidence in them to do it myself, and to like hold to that level. And so I started with just using them and just practicing doing the tools. So the transition was at first like, okay, let's just see if you can do this. And I was just like, okay, well, we have a pullback. Okay, so, I'm just this. All right, so we have this and we have a pullback. All right, do we hit the 127? Yes. And I would just do this on, like, at the end of the day, on every name on my watch list. It was like, okay, where's a clear leg? And yesterday was probably not the best day, but um, I mean, they all kind of work. Oh, here was one that I did in Meta. So, in Meta, I'd be like, hey, man, how could I have traded this name? And I come back at the end of the day to kind of do a review. And this was the first step in kind of getting into that stuff. It was like, how legit are these fib levels? If you can see a clear leg, how legit are they? How much do they work? And you could just see how they always lined up. So I started doing that and getting used to how the names moved. and then a mix of that with Geronimo and just learning to trust them. And then that was kind of the first step. And then I did it with like one share at a time or one contract at a time. And I would open up a different contract than the one I'm hyper scalping. If I was hyper scalping, I would open up a different contract and I would just hold that single contract and be way out of the money. So I'm not, or in the money, out of the money, out of the money. So I wouldn't lose a lot on it or make a lot on it. But the concept of letting the trade work was there. And so I was just training myself, hey, you're transitioning. You're not trying to make money on this swing. You're trying to learn to trade this way. So how can you do it? So how can you take it? How can you time your entries in a way that you know you're going to be able to profit from it without getting hurt? You know, and Kelly has his way to do it, and he has his system, which is really good. Of like, you know, every time a 2-minute pulls in, you know, you get if you're getting a bunch of green bars. Let's go to a Tesla trade instead of Meta, and then I'll come back to Meta. You know, a Tesla trade, and you're on you're on a breakout or something like this, and I'm just throwing a chart. This doesn't mean that this is the chart, but let's just say you're doing this. It breaks out here, and then it pulls back. You get a red bar. It fails to break lower. You add to the position. It goes up. You know, it comes back down. You could add to the position again. You could add to the position again. I don't do that. Instead, I would try to time it, and I would just wait for the pullback. Because why do people think, and multiple reasons, what is one of the reasons we're like, dang, like Geronimo, like how you're still in this trade? Kelly, like, dude, how are you holding through this? This is like, dude, you held through all that and now you got paid on the other end. For us to think that, what does it mean? It means that they had to hold through getting shaken out. What does that mean? After they enter, there's going to be a candle in there that's a shakeout candle. I'm finding that candle. That's what I look for. Now, I also do the whole trade, but then I knew that was going to come. So even if I missed the initial trade, I would wait. And it was like, you'd wait for all this to happen, and then you wait for that other pull down. And you're like, oh, this is the entry, or oh, this is the entry. And I talked about it on Mitchell's show. And so then I started kind of doing the one contract or one share to practice it, and then be like, okay, well, if I'm going to size into this, I can do this, but how can I time my entries and find my entries? And the show with Mitchell, I kind of talked about that, so I won't recover that. And so I went there, and now what I do is what I talked about on that show too, I guess, is I take size. So like, I don't like saying size because people are like, oh, I can take 100 contracts. If I'm trading Meta, guys, unless I say I'm sized down, Apple, stuff like that, I'm 100, 200 contracts. Don't do that. I can lose $5,000 on a trade, $8,000, and I'm cool with that. Like, I'm totally cool with that. It doesn't even and it doesn't even mean I have a lot of money. I'm just cool with that if that's the trading plan going in. So don't size up. But I will take that sometimes, but no matter the size I take, I get out very quickly a majority of my size. So it's like if I'm trading Meta, for example, on something like this, something like this, and I think it's going to this. I'm just throwing up. I'm not even saying this is the right fib line. I don't actually.
It worked.
Yeah, we'll say that this one. So let's say that I get in this and I see this flagging and it hits the 21, and let's say I take it and this drops here. This is probably 20 cents. Later, Praveen. This would be like 20 cents, $2,000 on 100, something like. I'll sell half of that, so I'll sell 50 of those on that 20-cent pop, and then I made $1,000, and now I have $1,000 left. If it pops up here, I could shake out or add to the position, and then take the rest of it down for $3,000, $4,000, or $5,000 on the second half. But I lock in my ability to win right there on the initial pop when I'm right if I take size. That's kind of what I do sometimes, depending on how the name is moving. But I always get out of 50% of my position very quickly into that initial run, and then I let the runner pay me the rest. And if I didn't do that, I would take a lot more losses, and it would be very hard. And I practice that with different size and stuff, and I have found that that's the best way for me to do it. It's like if I'm doing something like this, and I enter here and it goes down to this 100%, like I'm out 50% of my position easy most of the time. And then this doesn't matter to me because now I'm just break even or maybe down a little bit and I get shaken out. I still make money. It starts breaking back down again. I get back in it and I get out more here, So stuff like that is, not to be long winded on it, but those are kind of the steps I went through and I'm still kind of doing it and learning when to be confident in it and when not to get shaken out and different things like that. Because nothing's 100%. You're going to lose. So.
And I just want to add one thing I think that's important is that so here's one thing that I've been doing to attempt the longer hold is on my trading view I'll do Alt H, which creates a horizontal line, and I have it set so it's thick and purple. So I know that if the trade goes below this level, I'm wrong. So it is there in my face, and I don't have to be stressed out. I just see, okay, as long as that purple line is being respected, this trade, I'm right on this trade. So putting those visual markers, I think, is really important. That's number one. Number two, I hate Meta as a trading vehicle. Like I'll do it on common for options. I don't know why. I just can't. I just do not enjoy that name. But if you are a Meta trader and you know how it trades and you get stopped out, you should be able to predict how much you're going to lose. Like if I take Tesla and my stop out is, and usually is the 1 minute low of the candle I bought through, I know I'm going to lose, 2 to 3 times the spread. Worst case, like 90% of the time, right? So if the spread's 30 cents, I'll probably lose 90 cents on the trade, and I'm fine with that. So being able to predict those losses is huge. But I think more importantly is sizing. And this is something that we could talk about this forever, but when it comes to sizing, you need to make sure that you're taking a size that A, if you're wrong, won't crush you. B, if you're right, you'll have, you'll make money and you'll be happy with your trade. But C, one that you're not just sitting there just freaked the F out. If you're freaking out over the size of your position and the trade, you're probably too heavy. Like I can hold 3 contracts at Tesla now a lot better than I could earlier in the year. I can't do it for 10. I can't do it for 5. But if you're not too heavy, you can absorb that loss a little bit more on an absolute basis, right? So I can't take 200 contracts at Meta. I'll probably never take 200 contracts at Meta. But if I can take 5 or 10, yeah, if I take 5, 10, 15, 20, I know my losses are not going to be something I can't come back from. So that confidence in yourself that you can come back as a trader is absolutely critical. Absolutely critical. Like how many times this month I was like a couple bucks away from being stopped out. I knew what to do. I fought my way back and I had a green day. Knowing the name, sizing accordingly, it's not just it's not just one thing to think about. You have to do it all in the moment, all at the same time. What's the right size for this trade? How much risk am I taking? What is my expected loss?
Never, like what Eddy say, never come in to something and be like, oh man, if this goes, I'll make this and that. Like if you're doing Meta on a move, and I trade Meta a decent amount, if you're going to do Meta and some of these names, like it is so much easier, and I've actually started doing it sometimes for longer holds and different things, to take 20 contracts, 10 contracts, 30 contracts and just let it go in a sense and have a little bit wider stop. Sometimes if the stuff's right, if I'm not giving trading advice, for me, and I have even found this for me, and I've done the math on it, that I sometimes would be better and would have a higher win rate taking 20 or 30 contracts in Meta and then letting the trade work than I would taking an aggressive size, which I'm prone to do, and getting stopped out more than I should or sweating bullets. And it's something I'm trying to kind of shift to. Like I think I'm going too heavy on some of my holds, and it's making the holds harder and other things. I think if I size down, I wouldn't get hurt on the losses, and my winners would be able to work. So I do think sometimes I'm going a little bit too heavy, and I'm trying to find that kind of sweet spot of doing that. And then as you get better and more consistent, you kind of find when you can add in a position, when it's still working, and all this other stuff.
Yeah, I don't do that. I don't add. I don't take partials. I just do. I'm in, I'm out. I'm in, I'm out. I'm usually marketing. And one thing I've noticed is that if I enter a position and my heart rate goes up, or let me put it another way. If my heart rate goes up before I enter the position, or my palms are sweaty, knees are heavy, I'm not feeling comfortable, I'm definitely not thinking straight, and I'm definitely going to put myself in a position where I'm not thinking clearly into a trade, and that's when you make silly decisions where you sell at the wrong time, or you tilt or whatever it is. So for me, like, I'm notorious for sizing small, even though I have an account that could handle more. I don't like taking massive amount of trades. No trade for me is ever a home run, unless it's like the first couple of trades at Tesla. But in
It's
the morning,
accidentally a home run. It's like you buy it and you're like, oh wow.
yeah,
It's like that's
yeah,
3 points.
yeah, it's like, oh, I just clicked a button, I should go back to sleep now. But never. Besides that, no trade for me is ever a home run, and no trade will ever stop me out. My stop out level, it's such an important number. If I'm taking a trade and it's, if I'm like 70% or 80% of my stop out because of that one trade, I was too heavy.
Mm-hmm.
Simple as that, too heavy. I rather take the small hits, small wins all day long. You're less toxic. It's a little bit more tiring, sure, but I fear the big red days. We've all been there, and it's the number one thing to avoid, especially in this bear market.
And John, I'll answer your question in just a second. I've got those pictures pulled up, so I'll go over them. But Eddie, is it your goal, or is it even something that you're trying to do? Like the trades I'm about to show, and how I posted these pictures in Discord, and I'm just gonna, because John asked, I'll go over the trades themselves. But is this something that these type of Fibonacci trades, measured move trades, that some of the different things that the levels that JR buys and holds to this target and stuff like this is that something you are trying to eventually grow yourself into? Or are you like, you know what, I'm happy with understanding that the price is going in this direction. I'm going to do it 2 or 3 times for a little amount. I'm just going to keep making, and I'm good with what I'm doing. Are you trying to kind of mix that?
The type of trader I am is I'm a scalper, right? At the end of the day, I want to make quick money quick. I'm not looking to make 2, 3, 4, 5 points on a Tesla every single time. If I make 30 cents, 50 cents, a dollar here and there on 2, 3, 5 contracts, I'm very happy. The truth of the matter is that when Geronimo or Kelly does have those trades, it's very hard for me to hold options on Tesla because I've seen how they move around and how the implied volatility messes them. But on common, no problem. You just set your stop and your take profit, and you just sit there and you're just there sipping your coffee, having fun. That's one thing. Just that, like I'll say it a million times, is that that's the future for me as a trader. It's being able to master those intraday swings because.
And you're going to go to the common side instead of the option side on that.
Yeah, it's way less stressful. It's way less stressful. Like, yeah, I could take 100 shares or 100 options of Meta, which to me is just holy F. I would never do that. But if I take 3, 4, 500 of Meta and I'm risking $1, that's fine. I can do that. That's easy. Like the stop is there. I know what I'm gonna lose. You don't always have that benefit with options on a Tesla or a Meta.
Yeah. Right? Please never go until you guys work to that. Even if you never market into 100 or 200 of names, like you're instantly risking 2 to 3 grand on a trade. That's if it's Meta. And if you're out of the option and the stuff, you're risking 10 grand, plus sometimes. So do not do, stupid stuff that I do.
My rule of thumb is that never put yourself in a position where where a trade can either get you to tilt or have such a big loss that you can't come back in more than 2 to 3 days.
And that's kind of Dan, and then I'll go to John's question. That's kind of
it's a good question, actually.
Yeah, that's how I calculate it, is a rolling 7-day average for my stop loss. And it might be hard to do when you get going. And so if I was just getting started, it's like, well, I've never traded before, so I don't have a 7-day average or something like that. Like early on, if I was trading, it would be what Eddie just said, kind of an idea of like, I'm okay, like the strategies can get me to make this. I generally make this. I would keep my stop loss very small at the beginning. Something that you could handle without bothering you, that you can go to sleep tonight without it messing with you, and then you need to trade accordingly. And then from there, it kind of goes into, for me, it's whatever my 7-day average is my stop loss, 7 trading day average. and sometimes I bump that and just make it like between 5 and 10 grand. And I'll keep it in that range. If it gets down below that, I generally will just be like about 5 grand. Why 5 grand? Because just about any day, if you said you have to make this amount today, that within 2 days I could make 5 grand. Like,
Yeah.
it's not even a thought. Like if you're like, hey, you got two days to make 5 grand, or we're gonna, whatever, break your knees again. I'd be like, okay. Like, yeah, I would just be like, okay. And that's all I would think, is it'd just be like, okay. So I generally keep it at that, between that 5 and 10 area. And it's a mix based of how I'm trading versus how I kind of feel at this point in my trading career. But it's that level, and it should be something like Eddy said, that within 2 to 3 days, that, hey, I can come back from this. I'm not on it today. I'm just going to back off a little bit, and I'm going to let this one go. And I know that I'm going to come back the rest of the week. I'm going to make this day back, and I'm fine. Once you're like, man, this is going to take me a month to get back from, 2-3 weeks to get back from, you're going to lose some sleep at night. You're going to come in too heavy the next day. That's what you want to avoid. And so your number, if that number is 50,000, good on you. It's not me. If that number is like 2,000, good. Make that your number. If that number is $500, make that your number. If it's 5, 10K, it doesn't matter. Everybody's different. So that's kind of the psychology-ish aspect of how I calculate that number.
Yeah, and Dan, it's such a critical question. I think there's two things I want to say on this. Is one, my number used to be 2,000. So if I lose 2,000 on the day, that's it. I'm done. I walk away, and I'm fine with that. I turn off Fidelity. I tell the people I traded with, guys, I'm stopped out for the day. I hold myself accountable. But I was talking to Geronimo every time I had those days. He's like, bro, you cannot handle being down 2,000. It just, look at you. You're a wreck. You feel horrible. You're thinking about it. You're trying to figure things out. You should divide that number into 2 and make it 1,000. And what's interesting about that is that I used to be, like a while ago, for me, if I lose $200, I was just like, oh my God, it's over, right? That's how I was back in the day. And that number started going up, and it went from 200 to 500 to 1,000 to 2,000. And I brought it back. And now if I lose $1,000, I'm like, I could make that in 2 or 3 trades in Tesla in the morning on a bad day, right? Like, I know what the market's giving out right now. And I know if I lose $1,000, okay, it's not the end of the world. I can come back. So that I have to figure out what that number is, or I'm no longer toxic, right? That's so important. And when I have that stop from 2 to 1, my mood got better. I was less worried about, trading during the day. It really gave me a lot of I guess, ease in the morning, because obviously, waking up at 5 in the morning already is difficult. But to be able to say, oh, I might lose 2,000 today, suck. I lose 1,000, I can come back from it.
Yep.
That's the first thing. The second thing that's really important is it's not a stop loss if you don't respect it. Okay, if my stop loss is $1,000 and I'm down 3,000, did you get stopped out for the day? No, you didn't. You're lying to yourself. So if I'm down $1,000, that's it. I'm done. If I'm at 1,500 down and I keep trading, it's not a stop loss. It's not a stop loss. There are people in this room that we've talked to. Well, I don't know if you have, but I'm pretty sure you have.
Oh yeah.
Or like, what's your stop loss? Like, 1,500. How much are you down in the last 2 days? $6,000. I'm like, something's not adding up here, buddy. Like, what is your true stop loss? So, one thing Geronimo made me do as an exercise, and it's actually now part of my journal, is I take all my red days and I say to myself, had I been stopped out and respected it this month, how much money could I have saved? Last month, you want to take a guess at how much it was last month?
Probably like between 8 and
12,000.
Yeah.
Wow, 7.5. Look at you.
There
Nice.
You go.
What it was this month after respecting it, $200.
Nice.
That's a huge improvement. That's $200. Like, that's for me, respecting my stop loss helped my P&L.
Helped you by 10 grand, or not 10 grand, set like 7 something grand. And for the people, the 700 people that just hopped in, y'all want to leave a like, always appreciate it. Like, subscribe, all that fun stuff.
Yeah.
But yeah.
Showing.
But literally respecting your, like, having a number that you can respect, that's
It's huge.
That's huge. And like you said, you saved yourself like 7 grand's a pretty good chunk of change in a month, like that you can make just from respecting, you know.
Your rules, your trading plan.
Mm-hmm.
And I'm very disciplined when it comes to my trading plan and my losses because, like, Mark Fink always says, and I'll let you do your
Yeah, you're good. You're good.
is you're not, as a trader, you're not really defined by your wins, you're defined by your losses, right? Your
Yep.
losses are really what you need to be paying attention to. So if you can bring those down and analyze them and really, drill down why it's happening, you'll save yourself a lot of unnecessary toxicity. You really will.
Yeah, you will. It's going to be a huge difference. And Dan, that's kind of how you have to get that stuff in there, and you have to respect it. You have to figure out that number for yourself. And there's stuff like Geronimo's talking about with Eddy, and I've kind of had to do the same that I've been doing during the day that have helped me change. And it's doing stuff like I'm about to show you here, like this fib trade and stuff, and taking less trades in the afternoon, respecting not so much the stop loss, but respecting my wins. I have no doubt I'm going to hit a stretch soon where I'm taking a lot of losses. I haven't been as much, thankfully, lately. But it's more I give a lot back, and I give back a ton sometimes. So I'm wanting to correct that. And so over trading in the afternoon is something I've kind of been under control. Yeah, Praveen. Yeah, if you guys do like this content and you want to share, you want to like the content, it does help the channel. So leave a like, share it, subscribe it. A lot of you guys apparently shared it with somebody because somebody came in. So yeah, it helps the channel out. It does help it grow, helps the algorithms and all that fun stuff. So let's review a trade. John asked about Thursday's trade. Over in Discord, if I'm trading these and I call them out in the room during the day, I'll share them under our charts channel. So we have this, and we have our charts, like we have our voice channel, and then we have our main chat, and below that is charts. So these are 2 pictures that I posted the other day of 2 Tesla trades that I called out. There you go, Rebecca. They just let me know. So
is this Thursday?
This is Thursday. So this is Thursday in Tesla. This is the picture that we drew, and this is my notes on it. So the fib, you had a gap up in Tesla, a pop up, a failed, a double top, it broke down. So we broke down and we flushed. What do you see here? This is a clear leg. For those of you looking for like, okay, how do I know when to trade? I can't just take every 21. This is a clear leg. You went up. I'm pretty sure on one of my charts I had resistance right up here above us. We failed to break out, or we broke out. This was resistance and support. We broke through it. We popped. we tried to hold it, but instead of ripping higher for our next high, we broke down. Okay, we flushed. Now we flushed. We went all the way down. Here is a leg. All right, so we have a leg, and technically you popped up here below the 21. You failed to get back above the 21, and you went down. Throw your fib up. All right, you've got a Fibonacci retracement. This is your, if I zoom out, this is your 38.2% retracement line. This is so weak now that it didn't even retest this line. So we hit the 21, slightly pop above it. As this next candle is coming through, so I drew this line. Once it starts coming back up in here and the charts around this area, I'm throwing this fib in and I'm waiting for the 21 test. We have a 21 retest. And so, all right, we start breaking down back through the 21. Here is your technical trigger of the red candle taking out a green candle to the downside. Generally speaking, I enter as this starts breaking the 21. It's like a front run kind of, but it's not the actual trigger yet. The actual, gotta delete this. Give me 1 second. I need to make some of you guys moderators, so you guys can handle the bots.
What Praveen is saying is how I see it is just nonstop portals. When
Yep.
you have all those triggers coming in 1, 2, 5 minute, it's a thing of beauty. It's so much fun.
It is, and there are the triggers there. And so this is like the triggers here that we're talking about. It's just because of Eddy. Eddy's the man. I'm telling you, when Eddy comes on, it's like Eddy's gold. So we have this entry here. Now, there are portals, there are marks, there are C strategies. If I go to a chart, if you guys go look at this chart on a 5 minute, there are a lot of different strategies. But what I'm looking at this time, other than some of those portals, is just this. So you enter it here. All right, your first target to take profit should pretty much always be the 100%. Why? Because look, it bounces there. That's your first kind of double bottom level. You don't know what's going to happen. You got to take profits. I think I had 20 contracts. So I sold 10 and now I had 10 left, and I'm just letting them ride because they have to go all the way back up here for me just to even break even. So I'm just going to let it ride. And if I was Kelly, I'd probably be adding somewhere in here. I didn't. I'm just going to let these 10 contracts ride. I'm going to wait for them to get close to break even and just sell. And at this point, this might have been $2,000 or one, or I don't know. Doesn't matter. And it's like, okay, yeah, we pop back around here. We chop around for a little bit. All right, we start breaking down and we go to the 127% retracement. And that's your final target. So you don't get hurt in any of this chop because you understand what's happening. We have a solid leg down. We popped up. We hit the 21. We hit here. You took your profit. Now we're just chopping around, and then boom, you're good. That's the trade. Now there are portals here. If we go to, do you want me to go over the portals? Actually, so I just talked about the fib trade. Now, Eddy, what do you see? And Praveen said the portals and stuff. So explain the portals to people. We just went over the fib trade on a way to trade it and hold it to target. Now let's look at maybe a way to take 2 to 3 scalps within this move to trade it. Yeah. So there are multiple ways to trade it.
So that's what I love about this room is that I do my own thing, you do your own thing, Geronimo does their own thing, Kelly does their own thing. All these traders are doing their own thing, yet we're coming up with the same targets, we're coming up with similar styles of trading. It just shows you that if you don't like my style or your style, it's fine. There's somebody's style that'll give you the results you want. You just have to find it. Now, in this particular instance, what Praveen said is absolutely true. I'm on my monitor, obviously, so you can't see what I'm doing. But if you just draw all the 2-minute green bars that you could have shorted through and the 5-minute, you'll start seeing portals. And to answer what a portal is when you have...
You want to share your screen, or you want me to just jump? I can jump over to it and show it on mine, I guess.
Well, I'll be honest with you. I would much rather do Friday. Friday was a really good portal day.
Okay, so there's a second trade. I guess we could jump into portals, or I could do this. Would you guys want us to jump into portals? Well, let's do another one here, and then we'll do some portals. So let's do the second trade really quick, just to finish John's initial question, and then we're going to talk about portals. So, sure. And this is there are probably other portals here, actually. There's definitely a 5-minute reversal here. There's definitely some other stuff here, too. So now we hit the 127. This is part 2 of the trade. What do you do next? Well, we see what happened here at 8:19. So 8:19 was... Is this the same day? This would have been the trade. Yeah, so that would have been the trade, right? What's wrong with this? 8:20, 8:19. All right, so right about there, yeah. So look, this was actually the bottom. So our exit was the actual bottom. The 127 replacement. Look how that freaking works. So you get out of your position there. You have this. To be honest, we're back into the 8. Let's be honest. Some of us shorted here because this is, we short the 8 and maybe we scalp it, maybe we hold it. Fails to break down, it breaks up. What do you have? You have a double bottom now. Failed to break lower, double bottom. We don't short it again, we just wait. Let's wait for the 21 to test. What happens? It comes up to the 21. It didn't fail off the 8, so we got to wait for the 21. It hit the 21, but instead of breaking down, we busted through it. All right, we're done with the shorts. We busted through the 21. It didn't hold up. All right, so now what? We go up. This is now a fib line. So now I'm thinking, all right, we went through the 21. I am now waiting for a red candle on the 2-minute to pull in. As soon as this pulls in, I'm not waiting until I enter the trade. I'm throwing this fib up. So I'm like, okay, here's the bottom. I'm waiting for the top to come in. All right, we're pulling in. This is now the top. All right, now let's see what happens. I've got the 50% retracement line here. These notes say this. If you guys are in Discord, you can go read these yourself. We pull down. We just go just below the 50% retracement, basically hit it. And then we pop back up through the 21. Little shakeout here, back through the 21. For me, because I'm already looking for a long here, I enter here. Here's the actual technical entry. but you take your entry here, it starts going up. Here's your first exit as it busts through this. You could get out there if you want to. You can hold whatever. Because I'm probably doing 10 to 20 contracts, I'm going to take half of it here on this candle. I'll wait then, and then here's your 127, your final level. And what Praveen is saying when he says add on GBI, green bar ignored, that's like what I believe that would be like down here. Like you would add on this candle, you have this pull in here on this move to the 127. You're breaking down, and the trade is not it's not failing. It's being ignored. In this case, it would be red bar ignored. So you have a red bar, and then these red bars are getting taken out. You would long, you could add to your position. This isn't a good one to do that on, but you would go long, or you could add, or for me, I just hold the other half. There's your 127 extension. You can be done. For this, you could say, oh, hey, it's a V bottom. You're breaking through this area here. You're probably going to test the 161 and the pivot, and we could go higher. All true, but on the previous leg, you were talking about on the previous leg down. Yeah, you're correct. It would be green bar ignored. So it would be this one. You would add on this one on the down leg. This is obviously that previous candle. So you could actually add, I think here, you could definitely add here because you just keep going lower. So there's a couple spots to add. I generally don't add RBI. Yeah. Now it's red bar ignored. So, and then that's my target. Yeah. And then that would be my target. And I'd be out of my other half of the contracts there.
Can we talk execution here? So when you say you add, you're on your Fidelity and you do 5, 10, 20 contracts, I guess?
You could, yeah. So I could initially take 20, sell 10, and then if I was adding, I could add 5.
Okay, so you're actually using, well, this is for Tesla in particular, but are you actually manually typing in the number of contracts? I guess for Meta, you have to.
For Meta, yeah.
Buttons, right?
Yeah, I just click the buttons for Tesla. For names like Meta, Apple, smaller names that don't move as quickly, I just type them because I'm just sitting there doing it, so I can just like and have it there. But for Tesla, I only do in spurts of whatever my presets are at.
Yeah. Okay. Cool. I do the exact same thing because a second in Apple versus a second in Tesla are two very different things, right?
Yeah.
So yeah, that's a good point. That's good. On Fidelity, directed trade is a great way to preload everything.
Yeah, you could split like what Praveen is saying here. Split into 3 lots, buy 3, sell 2, 100%. Yep, to 100%, man. And for doing that, and for learning to do this, don't do the size. Like you want to do smaller stuff like that. You want to come in and have stuff like this happen, and you want to be able to hold to those levels. And so that's how I played John, does that answer your question for what I did? And then Eddy, we can go into some portal talk. But John, does that kind of answer the question on what the trade was? And there's different ways to do it. The 3 lots, I've thought about doing like 15 contracts and then sell 5, sell 5, sell 5. You can hold runners. You can do all different kinds of things on how you want to trade it. That's your personal kind of development as a trader. But all that really, the point is that here's the trade and here's how you execute it. Yeah, you do 15. Yeah, I had nothing wrong with that. I just didn't have a preset for 15, and Fidelity only gives you 3, so I have like a 5. And I need to get rid of the 5 maybe, but because the 5 was for Amazon back in the day, and now there are no things that I take 5. Like I don't really trade 5 contracts anymore. So I could do like a 10, 15, 20. And then that would allow me to do 30. I need to stop.
Oh boy.
You're going to get me in trouble, Praveen. But yeah, so that's the trade. That's how I identify it. I do what you saw here is what I do every single day. This is what I'm looking for on these trades. And this is what I'm focused on, or what you guys just saw me talk through. I try to call them out live when I'm doing them like this. I call them live. Some of the hyper scalp stuff don't always call because it's just next to impossible early to call that stuff. But stuff like this, all the time, all the time. So I'm looking for this, and it trades differently with Meta, and every name trades differently. But I'm looking for those general patterns. I size according to the name and the move and what's going on in the market, and I let those trades work. and that's different for different people. So let's talk portals to kind of jump from that to that.
So you want to, can I put my screen up?
Yeah, let's go over to,
And by the way, just to finish up what you were just saying,
yeah.
everything you just said, market conditions and all that, but your own personal mood is everything. Like if you're not in the mood to trade, or you got into a fight with your significant other, or you ate a Chipotle burrito with extra beans the night before and you're not in good shape, those all matter in your
Yep.
trading.
Let me know.
So
Just share your screen through Zoom, by the way.
share my screen through Zoom.
And then, yeah, guys, what Eddie just said, like I took some of these trades this week, and then just give me a second to get your screen shared on here. I, there you go. That should is. Let me see. Is that all your screen? No.
That's good enough. I can work with that.
Can you work with what you see there?
Exactly right there.
Okay, so really quick on what Eddie's saying, like some of the trades. So this week, you see Tesla here on Friday, guys. There once on some days in this, I would have absolutely destroyed. But I was not trading sharp Friday morning, and I was not trading sharp Thursday, and I don't think I was trading sharp Wednesday because my kids weren't letting me sleep. And I felt fine, and I made really good trades, but I actually wasn't doing hyper scalps to make most of my money. What I did in Meta on Friday made me more than this. And I'm a Tesla trader. Like there are times this would have been a 5-figure day. This wasn't. I traded fine, low to mid fours on this, but I doubled, almost tripled what I made in this on the Meta call out that I did in the Discord room on that chart. And it was literally just because I didn't even take massive size. It wasn't one of those 100, 200 things. It was just the trade itself worked and all that fun stuff. So yeah, Eddie, go ahead.
Yeah, let me just see. Is this clear for you guys? Are you guys able to see this?
Yeah, they can.
We're good? Okay, I just want to make sure that.
So what's the top is a time frame of?
The top here, you'll see here is a Tesla 2-minute chart, and you have a Tesla 5-minute chart. Okay, so this is the 2-minute Tesla, this is the 5-minute Tesla, this purple line is VWAP, this green one is the 200, you got your 8 and your 21. I'll remove this just to avoid confusion because it is not relevant. Perfect. Okay, so my big thing as a trader is I do portals, right? What is a portal? Is when you have a trigger through multiple time frames that helps you with they get you an explosive move. So what does that look like? So the first portal we had was this one right here. We had a 2-minute green takes red. It was the first 2-minute green takes red of the day. You were about to get a 5-minute breakout. You actually missed by 2 cents. You took the loss, but it was still a good trade. Why is it good? Because you would have had a 2-minute breakout into a 5-minute. But here were the 2 trades that actually made my morning, and when I could have walked away, but I like to trade. So you have the 2-minute 8 hit right here. You have a 2-minute green takes red at 788.50, right? So right here, I'll make this easy for you guys. Takes red. All right. Is that better? Yeah, so there's your 2-minute green takes red. And then you had a 5-minute breakout right here. If you look at right here, this second trigger at 791.93. This is on the 27th of July, just so we're clear, right? So I have my 2-minute breakout. I'm in at 788.50, and I'm looking for a move through 791.93 into day highs, which was 795.65. So notice all the different levels all these blue lines. I have a 2-minute trigger, I have a 5-minute trigger, and then I have a day high trigger. Right? Now that's hot. Like I'm taking those all day long if I can. You're into the 8, your 2-minute green takes red hasn't hit, nothing has happened these last 3 candles. I have a 2-minute into the 5, and I was in the NewsBeat live room yelling at people. I was like, guys, 2 to 5 minute, 2 to 5 minute, 2 to 5 minute. And if you look at the 1 minute of this, that's not the right day. Give me 1 second. If you look at the 1 minute here, right? Your 21 is being respected, right? And your VWAP, and you're getting really compressed here, right? You're looking for an explosive move. The cues were popping. They were in your favors. So my 2-minute green takes red trigger was right here. Look at this. Look at this move. You would have caught, $8. That's not a bad move, right? On those early morning options. So those are what portal trades are. I'm taking multiple time frames. Forgive me 1 second. Let me just get it back. I'm taking multiple time frame trades and they're lining up perfectly. Now, let me show you an even better one that happened that actually, I didn't take this one, unfortunately, but it was a huge winner. If you look at the 5 minute here of Tesla, you had a Mark 5. So Mark 5 is when you don't break the high of the previous 5 minute candle, call it a bull flag, right? But it's nice. You're above the 200, you're into the 8. Here's your trigger, 805.03, right? This candle right here. Now let's look at it on the 2 minute above here, right? You have this 2 minute candle right here. You trigger right here, right? So this was your 2 minutes. So you could have said, yeah, all of these, these candles, a lot of these breakouts would have failed fine, but I'm looking at the 5 minute and I'm saying to myself, right, I need an entry point. Where do I want to get into the Mark 5 so that I can get an explosive move higher? Look at this. Here's my trigger. I see this 2 minute green takes red right here, right? 804.55 would have gotten you to 805.03. You never broke this low. So I told you guys I do Alt H on TradingView. This literally shows me my stop out level. So this purple line, I'm wrong. We never even got close to it. And then you would have hit day highs. So you had a 2 minute into a 5 minute. You could have added here if that's your sell on an inside candle, and you would have caught this really nice move. I didn't take this trade, but it's a very legitimate portal trade. So when you're taking multiple time frame triggers,
Basically buy triggers. Like if you were listening or thinking overall like market language, it would be like you're basically getting buy triggers.
Yeah, it's buy triggers. It's triggers on multiple time frames where different market participants are looking to buy. So there's different market participants on the 1 minute, on the 2 minute, the 5 minute, the 15 minute, all time frames. So each one of them are saying, ooh, I want to be in at the 2 minute. Ooh, I want to be in the 5 minute. And if I see this 5 minute candle and I want to buy through it, I'm looking for a way in earlier, right? And that was my entry. Let's look at the 1 minute real fast. Let's see if the 1 minute could have given us an entry point. Look at this. We're holding VWAP, right? This is my 2 minute trigger. We're holding these candles. You have a 1 minute. There's no reason to think, oh, I should buy through this 1 minute. But let's say you draw this line, you see this 1 minute candle, you buy through it, inside candle, you don't break a low, you're holding the 8. Look at this explosive move you catch. So these portal trades give me conviction, and they're the ones I'm more comfortable sizing up in, because I know if I'm wrong, if I buy through here, 804.55, I'm out at 803.42. You can't see the levels, but they're there. They're written on the side. So my risk is very defined. So if I draw it like this, I'm risking $1.13. Well, let's say I want to hold till day highs. $5.86 is my potential. So that's a 5-to-1 risk reward. That's hot. And it's the portal trade that gives me the entry points. Did I explain that well? Does that make sense, Peter?
I think I got it. Well, I mean, I know what you're talking about. So like in the chat, let them know if that makes sense. And let's hit it again over here. So just jumping, if you want to stop sharing your screen, or I can stop you from sharing it if you know how to do that. There you go. So now you're there. So looking at this, a portal is what you're seeing, and to re-say what Eddy said, and is you have different buy setups that are part of an already defined strategy, and they're setting up back to back to back. So one setup is taking you to another one, to another one, to another one, and you got to think there's a lot of, like, we're not the only people playing the market. There's a ton of people out there. So all these people that are out there that are playing it are buying on these different time frames and algorithms that are doing this, and people buying the hourly and the 15 minute and the 2 minute and the 5 minute. So when you have a buy setup setting up on 3 to 4 to 5 different time frames at the same time, you can look at a chart, and in the same way you can fib a level and be like, I think we're going here, this is the retracement, this happened, we're going here. Within that fib, it's like, yeah, you're probably going there, because look at these charts I have up here. So this is a 1 minute top left, 5 minute top right, 2 minute bottom left, and 15 minute bottom right. So on this pullback entry, which is the entry that I gave you guys on the second trade, this is this day, this is this trade. We're now looking at this on multiple time frames. What strategies do you have here? What's happening? Here's a 1 minute. You're pulling down into S1 and the 1 minute 200. Ooh, support. So not only do I have a fib, I broke through the 200, pulled back down into it, and S1, and then launched off for a 1 minute buy setup. You also had a green takes red down here. Already talked about that. So you have a 1 minute buy setup, a 2 minute buy setup. On the 5 minute, look what you had down here. If you want to look on a bigger time frame, look at those double hammer. Look at that double bottom right there on the 5 minute. Look how beautiful that is.
Money.
Yeah, and then we pull up, we put in a red candle. Look at this beautiful buy, like right on the 5 minute 21. So we broke below the 5 minute 21, punch back up above it. We close above it. The next candle opens up, tests the 5 minute 21, and then rips for a 5 minute. It's not technically a mark, but this is a 5 minute buy setup, and this is a pullback on a trade and an entry, and then you have this. And then look down here, you have a 15 minute setup. And if you see when I click, my hand, I can't point. When I click here, it obviously lights where everything is across all time frames. So we click here, look where that line is, that yellow line at the top. So you also have a 15 minute setup. So we pull into the 5 here and boom. So on this trade, not only do you have a fib line getting you there, you actually have a 15 minute buy setup happening too off of a 21. So there's these, like, as you're expanding what you look at in the market, you're looking at all these different things and you're like, okay, all of this tells me to get in. I don't remember what I was doing. I actually think I had to leave, but I was looking at this. I'm like, we're going to retest 43.11. I just had something else to do, so I had to get off. But you have that there, and you're like, we're going to go back to there. The fib takes me a little bit. What does the final fib take? The final fib takes to 873 for the 161, but 43.10 or 43.11 was my resistance on Tesla for that day. And when you look at those larger time frames, and if I was to jump out to an hourly here, what's the hourly? You had an hourly that pulled into the 8 and then bounced, and you have an hourly buy set up at 34.96. Man, these bots are something today. Hide user on this channel.
Can I
yeah,
have
go
to
ahead.
add one thing that's super important here while you delete these
Oh, you're good. I deleted them, but you're good.
Yeah, so you have to remember, if you're going to be doing portal trades, ATR is everything. If the distance between each trigger, let's say it's 840 to 842 to 844, and your ATR is 50 cents, you can't expect to have a $4 move right away. Mm-hmm. If your ATR is $5, then yes, it is more realistic. But if, in the trades that I was showing earlier, your ATR is $2 or $3 and the distance between your triggers is, let's say, $2, you are much likelier to have that 1 minute pop into all the triggers, because your average true range, the average expected move of a 1 minute candle in this case, it lines up with your expectations, with reality. You're not going to get a 10 point, it's like Verizon's ATR is 3 cents. You're not going to get a dollar move on a portal. Mm-hmm. Right? So that mentality of average true range tells you what to expect. It's super important. And it's a reason we talk about it all the time, because if you're there sitting, I'm going to hit a home run with 5 contracts and I'm going to catch 10 points in this next trade. It's like, well, your ATR is $1, bro. How much you really think this is going to move, unless something crazy happens, that like news, but it's something that you have to take into account. And I think Peacock says it, perfectly, is that your portals really are the moneymaker. I mean, you have the opportunity to catch really nice, predictable moves, and they don't always work. But with ATR, with portals, having that vision, someone like myself or yourself calling them out, love it. Yeah, love it. I mean, that's how probably half my month, if I really looked into it, was probably portals. And I take size on portals because that's what I do now. Those are really the money trades. And you can just sell through a 15-minute trigger, you're set. You really are. And one thing, Paul Kruper is saying, good stuff, going to look for them more. I don't know what you use, Paul, as a trading software, a charting software, but I use TradingView. And if I do Alt-J, I'm on a Mac, so I don't know what that means for you Windows folks, but if you do Alt-J and you mark down your 5-minute triggers and your 2-minute triggers and your 15, you'll start seeing the portals right away, because it's right there in front of you. So when I showed you guys my screen a couple minutes ago, I was literally showing you, hey, here's the 2-minute, here's the 5-minute. And then when that happened in the room, you guys remember I went ballistic. Like, guys, 2 to 5 minute portal, 2 5 minute portal. The queues are ripping. We can go through day
You
highs.
convinced JR to take it. JR was like,
I was like,
okay,
JR, do something. He's like, oh, portal. Okay.
yeah,
And
I'll
there you
take it.
go. You make
Yeah.
your taco money that quickly. And it's really a thing of beauty because it's happening all the time.
Yep. And then
All the time.
you can hold through those longer ones if you're in the middle. Like, you know, you put all this stuff together over time. And guys, you've been here for about an hour and a half or so. If you know, if you're still here, like the video, share it, all that other fun stuff. If you're watching it after the fact, I do appreciate it. Just a random reminder. But if you are looking at that and you're looking at all this throughout the day, it's the reason I have a 49-inch monitor. I'm getting a second one, so I can. I bought the Odyssey. I didn't send you pictures of the Odyssey, did I?
No, I'm still waiting. That's
Oh, I thought I
pretty nice.
showed it. Oh, you were on vacation. Okay, I'll
Uh,
send you some pictures.
yeah, yeah.
But yeah, like it's a screen illustrate for certain. Yeah, I'm stacking my two Odyssey G9s. In my new office when I build it, they're gonna be like, uh, I can't wait. I'm gonna that's gonna be a fun video. Gator's office setup.
Yeah.
So, but when you start looking at all this stuff, and you're not just hyper and jumping in, but you're like sitting back, and you're looking, and you drew your fib, and you're looking at your different time frames. This is all stuff that gives you conviction. It's like, oh, it's like, I'm looking at this. All right, we have the fib trade. Oh, we're hitting the 1 minute 200. Oh, that's support. Okay. Oh, we hit a 15-minute like that short. Notice how lines add up. The 127 fib, like this is, where's Tesla? Like here. Look at, this is our exit on that trade the other day. Look where it lined up. Or you can't see it. Look where it lined up. If you go to that 15-minute, I can't click on it, but basically this is, yeah, you can see it there. This is that bottom. So you had a 15-minute 21 there. Oh, so you have support. So that fib line literally lined up with a 15-minute 21. The market works like the stuff is here for a reason, and these levels line up magically. It's either witchcraft or it's mathematics, which might be the same thing. I don't know. It's one of the two things
I'll take
because they work. And so as it starts working and as you see it, it's like, oh, this is definitely an exit. You know, oh, this is definitely a support and resistance. Oh, okay, so I can go long now. Okay. Oh, this is happening. Oh, we're in the middle of a reversal. And you can start putting these things together. And then whether you're doing a fib, buying every time it hits the 8, the 21, or you're doing what Eddy's saying, you're waiting for portals, or you're taking 1 minute, 2 minute, 5 minute hourly breakouts, you figure that out based on the strategy. But learning to see all this stuff in context is what helps you be consistently and helps you consistently make money.
Yeah, I mean, yeah, 100% agree. And one thing that you have to remember about portals is that they're not always going to work. You will have times where they fail on you, but if you can, back test it, right? Go through a chart and actually write down the levels and be like, oh, that was a good one. That wasn't a good one. And look for clues as to why things, like, for example, I know for me, 15-minute portals tend to work, but after 8 a.m., well, 11 a.m. for you, for the market time, the 15-minute portals don't work as well. So I sell through them. I wait for a pullback and then maybe I'll re-enter. But generally speaking, for me, I've noticed the 15-minute doesn't work as well later in the day. So, back testing this and making sure you understand it before you actually take the trade is critical. So don't go and be like, oh, there's a portal, I'm going to take it. Oh, Eddy said there was conviction, it's going to work. It doesn't work like that. Make sure you understand what you're doing, why you're doing it, and that you're comfortable holding. Because for me to hold a trade with size, you all know who've been in this room for more than a month that that's something that's difficult for me unless I have very high conviction, and portals give me that high conviction. Now, I want to say one thing is that when we're talking about time frames, we're not just limiting it to the 2 and the 5 and the 15. You have 1 minute portals into the 2, 2 to the 5, 5 to the 15. I do the 30. You have the hourly, daily, weekly. It all matters because multiple market participants are buying at different levels. There are weekly buyers, there are monthly buyers, there are daily trigger buyers. So, front running them on a 1 minute is, totally, you can do 15-second for all I care, but make sure you know what time frames are best for you. For me, the 2 minute and the 5 are just gold. You can do Oh boy, those Russian bots are working overtime, man.
Oh, dude, yeah.
Um,
I set up put my dad as a moderator, so he's handling them, so I don't have to. But yeah, just keep
that is very
deleting
cool.
them.
You got the family working overtime for you,
Yeah,
huh?
he's awesome.
But that's what it is for portals. And one last thing is make sure that you know what level to get stopped out at, because it's very easy to hold and be like, oh, it's gonna work, oh, it's gonna work, but they don't always work. So I take those stops quickly, and if I have to re-enter, I re-enter. I don't mind. I don't mind at
Yep.
all.
And it's important never to take anything in a vacuum. So some of you guys watching like, oh, okay, so I'm just going to do like I'm just gonna throw anything up anywhere and it's gonna work. And then you just start like, oh, I'm gonna do this or some I don't know. I'm making stuff up. I'm being eccentric. Or I don't know, let's see. Let's do something that's slightly more realistic than stupid.
Well, you really have to watch the cues more than anything. Because the example I gave earlier on my screen, the Tesla was lagging, but the cues were ripping to day highs. And I was like, guys, Tesla's going to catch up. It's the strongest name in the market. It's going to catch up. It's going to catch up.
Mm-hmm.
So when you say, don't do it in a vacuum, yeah, you better know what the market's doing. You better know, is there Michigan, Michigan consumer sentiment numbers coming in a minute or half a second, whatever it is. Knowing what the market's about to do is critical. And we can do that. We help that. We know that. We all have economic calendars available. So, that type of prediction, it's what we do, right? The Geronimo
Yep.
said it well. The better you predict, the better you get paid.
Mm-hmm. It is very true. And yeah, you can't just like, what I'm trying to say is you can't just throw stuff up anywhere and expect it to, like, really test whatever you use. Like if you're using portals, really take time to to practice after the fact, during the day. If you're in Discord with me, send pictures. Like if you're in the VTF, send Kelly pictures and be like, hey, I drew this. Can you check it out when you have time? Send it to me in Discord. Send it to Eddy and Geronimo. Be like, hey, I was looking at this chart. I drew this wedge and it didn't seem like something off. What was up? Try it. I'll answer you. I'm sure the rest will too. I can't speak for other people, but I know that they do that. So it's like, send it there. If you're like, hey, what about this portal? How would you have done this? like, actually practice doing it. Like actually find it work, watch it work, and then put it into practice. And yeah, Praveen or John, I'm not sure that it's the best adult dating site. I think it is a bold claim. I think it's probably fake news, to be honest with you.
Yeah, the .xyz is really what gave it away for me.
Yeah, if it wasn't for that, I probably would have believed
If it
their
was
claims.
.org, I might give it a shot, right? But
Yeah, if it was .org, I think there would be a pretty good chance that it could be one of the best. But
can we talk about one other thing that this is something you talked about, I believe, on your last show with Mitchell, but people are asking, do the C strategies work? Have you been getting that question?
yeah, I get it from some people that are struggling or that are, yeah. I still get even people that are successful. That they still like do C strategy work. Yeah, I still get that question.
You guys realize the C strategies are basically what Geronimo is talking about: bull flags, 1 minute breakouts, 5 minute breakouts, just with very specific rules. You're above the 200 if you're going long. You're above the 8, the 21. Everything's trending in your direction. It's when the algos, when a majority of the algos see favorable conditions, you'll get a more powerful move. But I've been doing C strategies this entire time, and they're working for me. Yes, there are times where you don't get that follow through, and you have to adjust. But if you're doing C strategies, mixing it with portals, mixing it with fibs, mixing it with, I know how sometimes you like to buy at a support level, where you think the candle is going to actually pop up. If you start mixing all of this, your Kung Fu is strong. It is strong. And you can really, you become a sniper very quickly. Just make sure you're fresh, and you're ready to go, and you're not overly exhausted or fought with your partner, or it all counts. It all matters. It's very, very important to use all your weapons as optimally as possible. Right?
Yeah.
That's something that I've been working on, by the way, this month, is the morning routine, getting myself ready to go. If you're not ready in those 2 to 3 minutes, you can go red so quickly. So staying, mental fatigue is a thing, guys. It really, really is a thing.
Yeah. And you have to remember, thinking about it, like the C strategies are a way to play price action. They are buy setups within the overall price action and move that is taking place. And that's really what they are. And they still exist and they still work. Will you get paid the same way you did when the market and Tesla's ATR was $8 and $5 at a time and it's just ripping up nonstop, in 2020? No, you're not. Might you need to take less size or use common and set a different stop loss, or do kind of what I do and find those like the bottoms of the candles to take it, and then it breaks out and then it triggers? Yes. Are you sometimes taking C strategies that aren't legit C strategies? You just see a 1 minute, 5 minute breakout. There's C strategy stands for simple, easy, and effective. Yeah, simple, easy, effective trading strategies. We have some of them listed in Discord and some other places in the VTF, in the NewsBeat live room, which I need to fill out a thing. I've got an affiliate link I need to post on my videos that they can show what they are and how they work. Eddy trades in that room and is one of the leaders over in that room with the C strategies, and you can watch some videos that will teach you what they are and how they work. But in a system, it's just a way to buy certain names at certain points, and they still work. They don't always work as well. Sometimes they do whip around and you get shaken out, and sometimes that's just the name of the game, and you need to adapt a little bit and find out ways to play them. But it's like the 21 still really works once you're in a bull move. So what we see here, and this is a perfect example of it in Tesla. Let's zoom in. So we're on a 2-minute chart here. So we see a 2-minute chart. And what's this 21? 21's in blue. So we're not in a bull run right now. We're in a consolidation. We consolidate, and then we take off, and we bust through day highs. And now we retest the 21 for the first time on the 2-minute. Guess what? That's a C strategy. Then look what it does after it does that. We break out. Where's the breakout? We break out through day highs, and we come back into the 8. The next 1-minute breakout after we come into the 8 right here, look what it does. That's a C strategy. Right, oh, look, we come back into the 8. Look, we had resetting volume on that pop. So we come into the 8. The first 1-minute breakout gives you a 371 to 67, a 4 or 5 point pop. We pull back into the 8. We had a reset volume. We pull back into the 8. The next 1-minute breakout, look what it gives you. Before, and all the way up here, a 7-point pop. Before you have a 1-minute breakdown. We pull back into, that's like the second time we tested. You test the 8 again. You have a 1-minute breakout that would allow you to scalp. We don't go higher. That's fine. Once we don't go higher, we don't trade the 8 again until we get a 21 test. So, all right, we scalp out or we get stopped out when we break down. That's fine. We test the 21. Look what happens when we test the 21. We go up again. C strategies are still there. They're a way for you to look at price action, and for a simple, easy, and effective way of buying that price action and making money that is, generally speaking, toxicity and complication free. You don't have to understand wedges and 20 different chart patterns. You need an 8, a 21, and a basic understanding of what's going on, like just from watching it, and follow a few simple rules like moving averages being in the right place, the 8 above the 21, above the 200, above the first 2-minute high of the day, a few other things, and in the middle of a bullish price action sequence, they work. Now, if you're just buying every time it randomly hits in the middle of here, yeah, you're just going to lose your money. You just identify, oh, we went down, we tested the 21, we popped up, we pulled in, we're in consolidation. All right, we broke out through day highs, we hit the 8, and now we're going up, and now the C strategies are there, and until it's done. So they still work. And for, I'm sure I rambled, but I'm sure your answer is similar.
You're 100% correct. What I would add is that the C strat. So it's very important. The concept of a chart reset, I think, is super important. I think you should touch on that very quick. But if you notice that when Tesla started breaking day highs later in the day with volume, it's what we call a chart reset. That means your C strategies, it's a pattern. You start with the 1-minute setups and the 2-minute setups and the 5-minute setups. So when you have a chart reset, when that volume comes in, you expect price action to perform in a certain way, because you're seeing that big volume, you're seeing the bigger players, the Bank of Americas, the Merrill Lynch's, the hedge funds, whatever it is, they're coming in and saying, okay, we're buying, this is the price action, because because they're the ones drawing the charts ultimately. Like they're the ones who decide what the buy, where the levels are, right? So we're just playing what they're doing. And the C strategy gives you a very specific, and like you said, I think very well, toxic free way of playing these names. Now, why is it toxic free? Because if a Mark 1, a 1 minute breakout fails and you took it and you lost money, you don't need to be toxic knowing you did everything exactly right. You followed your rules. You performed exactly as you should have. Your execution was perfect. You know that there's an 80% hit rate. I'm just making it up for a high hit rate. And you know that if it fails, it fails. But you know that you'll take it again because you know it's reliable. As opposed to, like you said, just buying a 1 minute breakout and hoping for the best.
Yeah.
Right.
Or just setting random 2 to 1, 2 to 4% risk reward on 10 different names.
Yeah, I mean, those will work until they don't. But the C strategies are, you know what they are. When I call out as Mark 1, everybody knows exactly what I'm doing, and why I'm doing it, where I'm doing it, and when I'm exiting. And the truth of the matter is you can catch your Mark 1s all day, your 2 minutes all day, your 5 minutes all day. You can just pick one of those strategies and you could milk Tesla just nonstop. Especially this week where the PI was just
pretty good.
Excellent. It was just excellent. Like I was taking, I think that the best PI I've had in a very long time was this week on Tesla.
Mm-hmm.
And you can just, you catch the quick pop through day highs and you'll make 50 cents, you make $1 on the contracts, and you just keep doing that all day and you come up with a pretty good day.
Yep.
And don't forget, you can use these, like whenever Kelly does his fib trades, you think I'm not playing the C strategies off of his ideas? I'm doing that all day. Like he'll be like, "Ooh, I'm in this 2 minutes short." I'm like, "And I just took the Mark 1 off your play. I'm done. Thank you for paying for my lunch." Kelly did that literally all week this week. He would be like, "Oh, I'm taking this. I'm in this," and like, "And I'm done. Thank you. I'm gonna have a nice lunch now." Like when I say nice lunch, like you make pocket money. I'm not there to hold all day. Nobody could have known that Tesla was going to do this all day. But if you play these little scalps all day, you have the opportunity to become, a wealthy trader, right? Like someone who actually can make a living off of this.
Mm-hmm. You can, and that's the ways to buy, simple, easy ways to buy and to understand what you're doing for beginners and for professionals. But then as you get better, then it's like, oh, I'm incorporating 5-minute time frames. I'm incorporating wedges into my trading. I'm incorporating pivots and supply and demand zones and fib lines. And as I'm trading, if you guys watch me in the morning, it's like I like to joke. It's like, oh, haha, I called the level. It was like I was looking at Tesla in the morning pre-show. It's recorded and posted, so you can go watch it. I said whatever I thought about it. I don't even remember. And I was like, we're here. We're at the end. We might be pulling in, but if we break above this 43.11 and we start going, I see we have room to to this right here. I think I said, what was this line that I had? 800 $84.49 is where I thought we were going in today if we decided to run, and it didn't really run, and that's just the top of a line back there somewhere. But that's just the next kind of supply and demand zone. If you break above R2 here and you consolidate, you're probably going to get to R3 today just because the bottom of these candles got taken out, and now we're probably going to test the top of them before we test 900. And if you ask me, I don't know what's going to happen in Tesla on Monday, but I'd look at it and I'd be like, well, just looking at it, we're above some of this demand here, but now we have all this. So, I don't know where Tesla's going to open up at. Let's pretend it opens up flat. You've got a lot of resistance and stuff. And, if you start breaking out, you pull in a little bit and you break out, you've got room to 925-ish dollars or so, and then 948 after that. And there are other ways to do that, but you start incorporating trend lines. You grow and you start incorporating other things. But C strategies allow you to look at things in a just simple, easy, and effective way to play bullish or bearish price action. And that's all you have to know. And then as you get really good at just that, and you're like, okay, I can make a little bit. Let's incorporate this. What's Gator talking about? What's Eddy talking about in portals? What's Kelly talking about, this magical witchcraft of fib lines? What's a measured move? And then you start doing that, and then you see these different things adding up, and then you're like, oh, okay. And then you kind of stack on the building blocks of seeing different stuff happen in the market.
I mean, the way I see it is the C strategy is a weapon of war. Your fibs are a weapon of war. Your 2 minute, strategies with Kelly, it's a weapon of war. The way you do these are all different weapons of war, but in different theaters of war, you're gonna have different weapons used. That's the good analogy I'm coming up with here.
Mm-hmm.
I'm really liking it. But when you look to, like, for example, if you look at a lot of different, military conflicts, there's different weapons being used because there's different scenarios where you need to bring in different types of firepower to get your objective, and not all of them are going to work. You can't bring a bullet to, in the middle of a bunch of artillery, right? But you can't bring a knife, to a gunfight, right? So as long as you can adapt and say, like, oh, C strategies aren't working, I'm going to do Geronimo's 2 minute reversals, or C strategies aren't working, but the market is definitely trending, so Kelly's strats work a little bit better. Knowing these is huge. And I don't do Kelly style trades, but I know what he's going to do before he does it because I understand his trading plan a bit better than I used to. I'm not, I don't know it perfectly. It doesn't matter. But if I know that Kelly's looking at a 2 minute setup, and I know that Gator likes it and I like it, and we're all different traders, there's something there. So that's the beauty of trading in a community, right? We're all sharing ideas. We all have different points of view. I think Kelly did not a video, but he proved, or he showed, that if you were to do the measured move a la Geronimo versus his fibs, it gave you pretty much the same target.
Mm-hmm.
At the end of the day, we're all looking at the same charts. So
There's just different ways of kind of getting to the same,
yeah,
levels. It's like, oh, I sold Tesla because it hit the 15-minute 21, at this trade the other day that I showed. And everyone's also, oh, I sold it because it hit the fib. Oh, I sold it because it hit this. Oh, isn't it funny how they all line up? Like I said, it's either mathematics or witchcraft. And that's why there's computers doing it. And you're never going to beat the millionaires and the billionaires and the trillionaires, the trillionaires, but the people that do all this and all that money that's out there. But hey, I'm just a surfer. I'm just going to ride the wave. Like, I'm not going to create the wave, but I'm just going to hop on it for my little part of the change. And I'm going to do that, Lord willing, for the rest of my life.
Yeah. It's crazy to think that, I was talking to my dad the other day, well, like a couple weeks ago. He's like, how much are you making in the market? And I told him, he's like, you realize this is not a real job, right? I'm like, what does that mean? No. He's like, well, I mean, I don't mean it like that. But he's like, well, you were working in an office, you were commuting, you were literally working in a field that you loved, you were moving things around, you were around planes and you loved it. And now you're just clicking buttons and making money. Like, is this really what you want to do for the rest of your life? I was like, Dad, on Friday, I was done after 32 minutes and I made more than I would have made in a week at my last job. Tell me what I'm doing wrong. And he's like, there's no arguing that point. It's like, okay, I get you. But, you take 2, 3, 5 contracts at Tesla and you do a couple C strategies or Gator style strategies or Kelly style strategies. I don't know how much you're making in your job, but if you're making $500 a day, I know you have that chart. That's a pretty decent paycheck, and you're working for less hours, no commute. So there's a beauty in all of this. And there you go. $500 a day is 125 a year, right? That's hot. I like that. I'm cool with that.
Mm-hmm.
And if you
and then minus your taxes, you'd pay, you'd probably be like, you're going to pay 20% of that or whatever. So it's going to be 100,000,
20%.
I don't know. Huh? Yeah, you're going to pay like 40%. I don't know.
Yeah.
But I mean, like, forget the taxes part of it, what you can make and what you can add on and build with what you need to. But all these numbers are achievable, not necessarily average and every day and stuff, but over time and consistency and getting there and staying mentally tough and strong as you grow, trading with people like Eddy, like Geronimo, like CT, Rose, Mitchell, who come on and do this, and you just do it so much, and y'all are together and you're seeing the same things, you're keeping yourself sharp, you're growing as a community, learning new things, adapting. Like, those numbers are reachable. Like, they just are. And it's not easy and it's not just going to happen, but over time you can actually, like, get there. Peacock, dude, I gotta have you back on the show because it's been a while, and so you've been doing this for a while, so I want to do a follow-up show with you, by the way, dude.
I've talked with Peacock a couple of times, actually. I think what's really interesting about someone like him is that like what we have in common is that toxicity is very real if we get things wrong. And how you manage it and how you come back is so critical. Like, I don't know about you guys, but like I think in April, May, June, I had 3 days where I had a 10% drawdown in my account from top to bottom, right? Not in one day, obviously, but that's for me, that's very toxic, right? You lose 10%, you're like, oh boy, 1 second.
You want to see how much I paid in? I guess I could show that, and I posted in the other thing. There's how much I paid in commissions and everything with Fidelity.
No, but what I was saying before is dealing with that toxicity. Someone like Peacock, I've talked to him and I learned a lot from him. Is that learning how to bounce back is so critical in this industry, because we've seen people who can't bounce back, right? They just don't understand how, like, once you're done, and like you could lose so much just hitting buttons, not understanding what you're doing. But toxicity is real, and
Yeah.
I have in my trading plan a way to come back. It's so critical.
And I want to answer Mitchell's thing, but first to hit what your dad said, and then jump to Michael's question and other stuff. Is it is a real job, and I don't just mean the money aspect of it, because you are not necessarily providing a service to a community in the sense of like I'm a lineman, a construction worker, a doctor, a lawyer, whatever it is, but you are a skilled. It is a trade. It is something that you are skilled, that you are doing. You are buying something and you are selling something to somebody else. That'd just be like, I would look at that as like if a doctor be like said to a clothes merchant or something, and they're like, you just sell clothes and you just resell. It's like, yeah, I provide, this and I do this and the opportunity is there. Really what you do with your life as a whole. And for me, or what you do with your life, what you do outside of just the making the money is really where a lot of the value can come in. The people that you can help, the lives that you can change, the community that you can build and grow. For me, my faith, being able to share your faith, your Christianity, be able to help the church grow, being able to help people in your community. There are a lot of other things to help your family, to put up wealth, to invest outside of the market, to buy homes, to do different stuff, to invest in other businesses. It's like, yeah, this is just a means to an end. But every job is just a means to an end, unless you really love it and it's a trade. But this is also a trade. And this is not just video gaming, clicking money to make money. This is a trade and a skill that you can learn to accomplish the means to your end. Just as for most people who, as they get out of, if you own a business or if you do this other stuff, there's something you're trying to get to. This is just a way to do that, to serve your community, to do whatever it is that, you've been put here on the earth to do. And that's just, so I do, it is a job, and it does take a certain amount of risk and a certain amount of skill and a mindset, and not everybody can do it. And that's just a fact, is not everybody can do it. And it's not luck. You can't stay in this with luck.
It is not luck at all.
No.
Luck, it's luck if you buy options and GME explodes to $1,000 the next day. But it requires preparation. It requires knowledge of market fundamentals. It's an understanding of liquidity,
risk.
This is a risk management job. This is a psychology job. But in the same way that when I was at my old job, I was not supporting people like financially, but helping people out, having them understand, having them, learn different ways to do their job better. At the end of the day, this is a job in the sense that you're running a business, and that's something you've talked about, it's something I've talked about. But the people who come in and they just start slamming buttons, taking 50 contracts on every little 1 minute breakout that they take, you're eventually going to put yourself in a position where your business is no longer a business, right? I wouldn't say that you're gambling, but you're playing with fire. So, that's why, like on Friday, I was done after 32 minutes. And I'm very proud of that fact, because I could have kept playing Tesla all day and I didn't. But, just being like, whoa, I had a really good morning. I'm going to lock it in, because that's what my trading plan says, is that if you're doing really well, don't risk it, right? Like you nailed it. You had a really good morning. You're on a high. You're going into next month. Be happy. I actually have to go in a couple minutes.
Yeah, you're good. We've been going for a while.
Yeah.
Do you want to hit, unless there's something else you want to do, Michael's question, I can stay on and answer it after you go.
Yeah.
On what you do.
So let me, I'm going to pull up my trading plan real quick, and I'm just going to read to you my, how I handle losses. So if I'm down $1,000 on the day, I stop. If I'm down $1,000 on a strike or a name, I'm done with that strike or that name. If I'm down for 2 consecutive days, $1,000, which is my stop loss, I'm done for the week. If I say I'm done for the week. If I'm down 10% on my account, I'm done for the remainder of the week, at least 2 days off. If I'm down $750, I have to actually walk away, force myself to walk away and be like, okay, OODA loop, what's going on? Right? What am I doing wrong here? Am I in good shape to keep going? If I'm down at like more than 750 but not stopped out, so like between 750 and 1,000, and I know that next trade can pull me over, I go to one contract and I make sure my next trade is green, and I just to get that confidence back. If my month goes from green to red, like big green to red or flat, I'm done for a week, the week, right? I can keep going. Like I respect all of these big time. And if I have an execution error of any type, buy puts instead of calls, sometimes you're trading Moderna, but you actually bought Tesla options, whatever it is, 2-minute timeout, I have to walk away. And this is what keeps me in the game personally, right? It's knowing, hey, you messed up, you're doing something wrong. You would have a rule in place to say you need to stop before it gets worse. And I'm proud to say that, my worst days are nowhere near my best days, and on an absolute value, nowhere near. And I can tell you I've had some very bad days this year, for example, and I know I can come back, and I have come back every time because I follow these rules. But listen, I am sorry to have to break this short. I do have to go.
You're good, man.
Dogs are going nuts. Thank you for having me, and hope we do this monthly recap more often. It's awesome. I love it.
Dude, I love it, man. I appreciate it. I'll hang out for a little bit longer, guys. I'll stay on. I'll answer the question. But yo, Eddy, thank you so much for coming on. Love you, brother. We'll definitely do it again. Let me know if you ever just want to come on and chat and whatever it is. You're always welcome on the show, dude.
Be well. Thank you, guys.
Deuces. So I'm going to. I'm kind of similar. I'm different than Eddy in the way that I'm not as precise with a lot of the stuff like that, because my personality isn't that way, and it doesn't mean I'm wrong or he's wrong. You need to develop stuff based on you, and you're the only one that should listen. Like, you shouldn't listen to me, well, Gator does this. Well, Gator's his own psychological, talking to myself in the third person, like, I'm my own psychological profile. I think one of my kids are screaming. Yeah, give me 1 second, guys. I'll be back. Give me 1 second. I'm going to go put my hand on him really quick. All right. Sorry, guys. So Gator, like, I'm my own psychological profile. So when it comes down to all of that, I can open this so I can hear. So I don't remember what was the, oh yeah. You need to create something and come up with something that is actually going to work for you, that you'll respect, like Eddy said earlier, and that's going to work, like Eddy said earlier. So for me, how do I come back, Michael, for really where your question, for a couple, like it's micro goaling. I've talked about this in the past. Like if I'm having 2 to 3 bad weeks or whatever it is, I first have to identify, what am I doing wrong? Am I having bad weeks because I'm not winning at all? So I have no winning trades throughout the day. Okay, if that's the case, I need to evaluate my strategies. That's not usually the case. The case for me is you're making 50 grand a day, but you're losing 60. I'm being I'm going extreme there, or a week. It's like, it's like, hey, look at all your trades. If you take your losses out, you had a $30,000 day, but instead you lost you lost 35,000 a trade. So what you're doing is, you're over trading. You're taking the wrong trades. You're hyper scalping way too much. And there's something wrong. So what I do is I try to identify where it's at, and then I'm like, okay, now I'm just going to take 1 or 2 trades. It's like, I'm just going to look for like something. I'm going to win and I'm going to lock it in. And then I'm going to win and I'm going to lock it in. I mean early. Like I'm going to take 1 or 2 trades. I'm green. But they need to be defined trade strategies, whether it's the pivot, whether it's a 21, whether it's whatever it is, and you're just locking in those micro goal days. And you're not making everything back. You're not even trying to make it back. You're just trying to, because you said 2 to 3 red weeks. So all you want is to have a green week, because then you had a green week. Now you feel like a winner, and you have to trust yourself in this job. You have to be able to look at yourself and be like, I've got this. I'm really good at this. I'm confident in the trades I take. You're only going to do that by winning. So you just start adding up small wins together, and then you do it again, and then you do it again, and then you look back and you're like, I made all that back. But then the trick is, once you make back what you lost in those 2 to 3 weeks, you think, I'm good now, I got this, and you smack it hard, and then you're going to go back down. Don't do that. Stay consistent. Remember how you got there. Remember how you got back. It's consistently just putting those wins together. Locate what you do really well, and then continue to kind of lean on that and be like, hey, I'm doing really good here. You have to talk positive to yourself. You have to be like, I got this. This is going to be good. You know, you can't come in beating yourself up every day like, I stink, I'm horrible, I can't freaking do this. Like, you know, I don't even need to be a trader. This is just like, this isn't like, I'm a failure, blah, 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 all the stuff that comes into your mind. No. You just put those consistent days together, and you're like, you know what? I screwed up. It's a lesson. Hey, I got this back. Look at this. 2 weeks in, hey, I'm good. Like, I'm good. I'm got this. I'm going to keep going. And you just build your confidence up by doing that. Does that kind of answer your that's how I look at a 2 to 3 week bad streak of like not making money or not making consistent money, I guess would be another way of saying it. Not sure what that is. Oh, it's a bot. So that's kind of that's the best I can. That's my general stuff. Yeah, you say you overtrade. You just want 1 green week, and was struggling. You're not the only one that was struggling. Like I did okay, but it was the price action in the summer is worse than the rest of the year. Oh, dog, come here. Come here. Heel. Quit opening that door. Wake the boys up. The price action in the summer is worse than the rest of the year generally, guys. So it's okay if you're having a hard time in the summer. Like, you're not wrong for doing so. You know, it is normal. It's completely normal. Yep, it's not, Paul. Sizing up sometimes can kind of be the death of you. Nice, dude. Dude, that's awesome. Peacock, that's legit. 3rd best month of the year. No big days, just keep adding them up, and you don't have big red days, and you'll be surprised at the end of the month. You start putting together like a few small green days and stuff. Like, you know, I don't know what you guys consider. Like, every person is different. What you consider a really green day. But, you know, start putting together some small mid green days. You look back at the end of the month, you're going to be really proud of yourself. Even if you're struggling right now, especially if you're struggling right now, the best thing you can do is not make it all back in a week. That's actually the worst thing you could do for yourself, because the next time you get dread, you're going to be like, okay, I can make it all back, and you're going to double down, and it's going to be twice as worse as it is now. The best thing you could do, in my opinion, and that's all this is small consistency over time, and reinforcing good trading habits and taking good trades over time. Locking that in and understanding what makes you successful and reinforcing that throughout the day, the week, and the month. You look back at the end of the month, you're going to be incredibly proud of yourself and be like, I'm there. And then just remember what you did to get there. Like, just remember, don't forget when you get there and you get back, because then you're going to give it all back, because you're going to blow up, and the second time will be worse than that time because then you're cocky because you made it back from the previous time. So just put those days together. Steve, you want to come on next week, by the way? I'm gonna message you. I don't know what you're up to, but if I've been wanting to do like a follow-up show with you, because it's been a bit, and we do tacos, but you have to do pizza for your football helmet. For those of you who know what we're talking about, for your the NFL, that the college football sticker, you got to do pizzas for yours. So if you call out good trades, we got to give you pizza instead of tacos. But yeah, guys, any other questions I missed? Journaling's really good. Yeah, Ralph. Yeah, I'll hit you up. I'm actually, I'll actually be down at my parents' next week, but I am trading. I'll still do shows next week. Not Monday, though. I won't be here Monday. Guys, I won't be trading Monday. I'll do a show Tuesday, maybe. I'll try to do shows. I'll be at family's house, so I'm not sure how that's going to work. No, walking away is key. Am I missing anything? I don't know. Just look at the ATR on the daily and the Qs. Like, I don't know, 4 points probably. Generally speaking, you probably have three points, I think, is average in the Qs, like somewhere in the 3-point range. So 2.5 to 3 is a good day. And then you have small days like in here where you have 1 point. So I'd say anything above 3 is really good. I'd say if you're in the range of 2 to 3, you're probably a good day, I guess. A good day's gain. I don't know. I don't. Excuse me. Getting tired. I don't. But yeah, but I guess that, I guess if you're above 2.5 on the Qs in a day, you're probably pretty good from open to finish, not including the gap. Not that you'll get that, but yeah, I think, Matt, that's a big part of it. So like, I walk away more because I have other stuff to do. I actually like being here. But yeah, I would say that's right. Yeah, I'd say if I had to think about it, it's twofold. So CT, for instance, walks away after 30 minutes. It's not because he doesn't trust himself necessarily. I mean, it might be partially that, but a lot of times he might just be like, "Hey, I'm good. Like, I made my money, I'm good." So it can be a mix. It's like I wouldn't trade all day. Like, I don't even really want to. I make pretty good money most of the time, sometimes, in about an hour of trading a day and then an hour in the afternoon. And it's not because I don't trust myself to trade. It's just now the trades take longer. So most of the move happens early and you make your money really quick. And then after that, like, oh, you need to be here 30 minutes to 45 minutes for a trade to work, and it's going to be choppy. I don't want to sit here and stare at a screen all day, So different reasons. If sometimes you're just happy with where you're at in the day. Sometimes, I think there are different reasons. And part of it, yeah, is like what Peacock is saying. If your psychological profile as a trader is like I know I don't like to sit around. I know if I sit here, I'm gonna overtrade. Like it's not necessarily a bad thing. I just know that's what's gonna happen. And you're starting to look into all that. And then I did miss a question. Somebody asked about the fade next week and the market going down. And you know that you're prone to that. Why stick around to give back money? If you made $2,000 a day in the first like 45 minutes, and you're up $2,000, $3,000, $500, $1,000, whatever, pick your number, and you're doing good, and you're all into your 7-day average, and your 7-day average is you're trading fine, and you're at here on the day, or at here on the day, or at here on the day, or even read one of these numbers, and you're 30, 40 minutes in, and either your day's good or it's not, and you know that things are slowing down and changing, and you're not into longer holds and slower pivot moves and stuff, and you're like, you know what, I'm good, I'm going to come back tomorrow, and that's your bread and butter, then just do your bread and butter. There's no reason to sit there all day, especially if it's going to make you crazy and you're not going to be able to trade it smooth. So long way to answer that question. But in somewhat, it's just understanding yourself and knowing where your edge is in the market. All this is about is having an edge, finding your edge. Got another question or two, but again, been going for a little over 2. So if you guys like the stuff, feel free to throw up a like if you think it's worthy. You can share this with friends, family, and all that. Support the channel. You can subscribe to it, hit the notification bell and all that. Let you know when I go live. Also in the Discord room, if you want to hop in there and join. I mean, it's free. You don't have to, but in the voice channel, you can listen to me and some other really amazing traders trade, especially the first hour of the day. We're pretty active. After that, we die off. Well, we go do other things. Somebody asked, I don't remember where it was, what I think about the market pulling in next week. I mean, it doesn't really matter what I think. I don't think there's any value necessarily in it, but yeah, I do. At least digest some. I think you have room in the Qs to 330. If you break here, 314, 315, I think you can make a move to the 330 area. Wouldn't be surprised to see that in the next week or two. I mean, you're only 3 days in and the market really launched. I wouldn't be surprised to see buying coming in. Maybe we get some consolidation and then a push to 330 in the Qs. Maybe a little bit more before we get a leg down. But you're at resistance right now in the triple Qs, looking at 314. You've got some overhead resistance. You come into this demand zone, which if you look here, here's a line I should have thrown up. Should probably talk to Geronimo a little bit more about some of these, but you've got a demand zone there around 317, which is the top of here. Yeah, and then some stuff in here. So, I think you have room to 330 or so in the short term. I don't know if we pull back, consolidate, like if we get a red day or two, or if we just go. There's no way to tell. I'm not going to pretend to know. But I do think you have room to around 330. Did I delete that? No. If you can get above, if you can get in here. But I could see 17 testing and then some consolidation. And then a move to the 30 range, and we'll see where the 200 is at that point. I could be wrong. I don't know if we get all the way back up to 350 or not before we go down, but 350 is kind of your natural, 343 and 350 is your natural, in my opinion, kind of end of this move, bull move, if we go that high. I have no idea if we're going to. That's just my random thoughts, but I could see 330 happening if we don't pull back hard. A day or two of consolidation maybe, and a move up. No, we'll see what the market opens up with on Monday. What kind of money? I mean, I started in 2020, Marco, so it wasn't necessarily, I've talked about this on other shows. I started with an $8,000 account in March of 2020, March of COVID year. Yeah, Matt. And then in December, I made by the end of the year, I made 6 figures. So I don't remember if I've ever said how much I made, but I made low 6 figures, over 100,000, obviously. And by the end of the year, most of that was made in December. I slowly built up, and it took me until December to make 25. And then when I turned 8 into 25 over the course of 6 months. About 6 months. And then once I got there, from December, I made the rest there, and I made over 6 from where I was at, made a little over 6 figures in December. And then, that's how I ended my year, and really getting that over that PDT where you can constantly trade. That happened when the Tesla joining the S&P and all this other news came out. So Tesla was just skyrocketing and the market was going up, and I caught some good moves. So I was providentially blessed to kind of hit PDT at the right time and start trading. I actually made my first 5-figure day in the hospital the day before my boys were born. So I was like sitting in there trading. So yeah. But yeah, guys, we've been going for a while. Been going for a little over 2 hours. One of the longer shows that we've done. I don't see. And then after that, so I don't know. I'm gonna do a 5K challenge soon. Once I've got a few things I've got to get done and some money I've got to make for some things, and then I'm gonna be doing a 5K challenge. So that'll be fun, and we'll see how quickly I can turn 5 into 25, and how that would work, and how I would recommend people doing that. Not recommend. I would never tell anybody or recommend anything to anybody, but kind of how that would look. So we'll be doing that soon. But yeah, guys, all in all, thank you guys for coming out. Thank you guys for hanging out tonight, watching the show. Everything else, Saturday night, good times. So I'll see you guys next week. I won't be in on Monday again, but I'll be there Tuesday, and we'll continue to trade this market. We'll continue to find setups. If there are trades like I've called out, I'll post them in the pictures of the charts and stuff afterwards. But if you have questions, send them over via the Discord. If you like this video, like I've said it, a couple times, go for that. You can post comments if you want me to answer any questions that you didn't get answered. And then also you can always hit me up in Discord, and I'd be glad to help you out, answer questions, review charts, anything else. So yeah, guys. Oh, it's getting late, East Coast, so 11:30, so I'm going to go get some sleep. Love you guys. Trade smart, enjoy the weekend, relax, and let's start next month strong. It's August, summer's almost done, so, let's, we ended strong, I think. Let's end next week strong. Oh, man, or end the year strong. Blah, and whatever. Here's the Russian bots again. Let's hide this user on the channel. There you go. One more time. Wouldn't be a show without the bots showing up. Thanks, guys.